Very, very good morning, everyone. How are you all? First, let me know that is the voice is audible, it is clear or not, so that we can start today's live session. Yes, Ganesh. Good morning, Chandra. Good morning, Balchandra. Good morning, Divya. Are you there? Everything is clear. Ramesh. Yes, audible. Thank you. Good. Yes. First, let me know that whatever we have done in the last day means last day we have taken asset based India's revision, and then in the night I have taken two more Indias, that is uh, India's 19 and India's 12. So have you understood that? In that any doubt? Because I hope you might have practiced some more question by your own. In that any doubt? If there is any doubt, we can discuss that particular question also. Follow. Today, of course, we'll start India's 116. We'll take the revision of India's 116, and there is one more chapter, share based payment. We revise share based payment also. Any doubt in the question of the last revision? No, sir. Very good. Excellent. Chalo. So today we'll start India's 116 revision. So just let me know that you want me to revise the content of India's 116. Can we directly start with the question? Can we directly start with the question? Okay, Ravindan, I will just check it and I will update India's 102. Don't worry. Okay, I will update India's 102. Don't worry about that. First, let me concentrate on India's. We'll concentrate on India's 116 right now. So, do you want me to revise the content, or you don't want me to revise the content of India's 116? Let me know fast. Content, please. Chalo. Let us start with the content. So, lease India's 116. First, we need to understand what is the meaning of lease. Lease means it is a contract or a part of contract. It is either one contract or a portion of contract that convey right to control. That convey what? Right to control the use of an identified asset for a period of time in exchange of consideration. In exchange of consideration, there are two terms: right to control and identified asset, that we need to understand. What India's 116, that any contract will contain a lease if it satisfies certain conditions. Means there must be some identified asset. If there is no identified asset, the contract will not contain a lease. So we need to understand what do you mean by identified asset. Identified asset means physically distinct asset. Identified asset means which is physically distinct, which can be separated from other asset. Identified asset means what? Physically distinct asset. But what India's 116 data that there must be uh, there there must be no substitution right of the supplier. Means if the supplier have substitution right for that particular asset, then that asset will not be an identified asset. So what they want to say, this para is very important from examination point of view. If at inception of the contract has a a supplier has a substantive right to substitute the asset throughout the period of use, then the contract will not contain a lease. Then it will not be an identified asset and the contract will not contain a lease. Correct? So it means the supplier should not have right to substitute, and the right should not be substantive right. So what we need to understand now, when the substitution right will be substantive. So what Ind AS 116 says that a supplier right to substitute an asset is substantive when the following conditions are satisfied. When the two conditions are satisfied, then right to substitute will become substantive. And if there is a right to substitute which is substantive right, then that asset will not be an identified asset, then the contract will not contain a lease contract. Understood? The first condition is what? The supplier has the practical ability to substitute alternative asset throughout the period of use. If the supplier has the practical ability, then we say right to substitute is substantive. And second condition, that supplier would benefit economically from the exercise of that right to substitute. There are two conditions. There must be practical ability to substitute. Second, the supplier would benefit economically from the exercise of such right. If these two conditions are satisfied, then we say right to substitute is substantive. Means if the right to substitute is there, but that is not a substantive right, then it will be an identified asset, then the contract will contain a lease contract. I hope this point you have understood. Chalega? So first point, you need to be clear about that, whether the supplier has a right to substitute. If the right to substitute is substantive, then the contract will not contain a lease contract. Got this point? Yes, sir. Now, what do you mean by identified asset? Already I said it is a physically distinct asset. It is a physically distinct asset. Physically distinct asset means it is independent asset. Independent asset means it is should be separable from other asset. But sometimes what happen, a capacity or other portion of the asset can be also considered as physically distinct asset if two conditions are satisfied. If two conditions are satisfied. Suppose you have taken one asset only for 95% portion, so that 95% portion will be also considered as physically distinct if two conditions are satisfied. First, it represents substantially all of the capacity of the asset, and it provides substantially all of the economic benefit to the customer. Correct? So if the capacity or the portion represents substantially all of the capacity of the asset, and that capacity provides substantially all the economic benefit to the customer, then that portion or the capacity will be also considered as physically distinct asset, and that will be considered as identified asset. Understood? So first you have understood identified asset. Second, we need to find out whether the customer has a right to control. The customer has a right to control when two conditions are satisfied. First condition is what? The customer has a right to obtain substantially all the economic benefit from the use of identified assets. Second, the customer has a right to direct the use of identified assets. First condition is what? Customer has right to obtain substantially all the economic benefit from the use of the asset. Second, the customer has a right to direct the use of asset. Normally, first condition will be always deemed to be satisfied in any examination question. You need to only see whether the customer has a right to direct the use. Now, what do you mean by right to direct the use? That we need to understand. So, what Ind AS 116 says, the right to direct the use does not mean right to operate the asset. Even though supplier is operating asset on behalf of customer, then also customer have a right to direct the use. So what do you mean by right to direct the use? Right to direct the use means that right to direct how and for what purpose the asset will be used. Right to direct the how and for what purpose the asset will be used. If the customer has that right to direct how and for what purpose the asset will be used, then of course the customer has the right to direct, even though it is operated by the supplier. It means if the supplier has the right to direct how and for what purpose the asset will be used, then the customer does not have control over the asset, then it will not be considered as a lease contract. Understood this point? So what they are saying, the right to direct the use of identified asset means it has a right to direct how and for what purpose the asset will be used. Correct? Normally what happens, the right to direct how and for what purpose the asset will be used is not determined, not predetermined. So if it is not predetermined, we need to find out who is directing that. If the customer is directing, then of course the contract will contain a lease, but sometimes it is predetermined. So if it is predetermined and the customer is operating the asset, or customer has a right to design the asset, then it will be considered as the customer has a right to direct the use of the identified asset, and then the contract will contain a lease contract. This is the point which has been given. If I summarize the particular point, whenever questions come for whether the contract contain a lease, first you need to find out whether there is an identified asset. If yes, then you need to go to the second condition. If no, then contract will not contain a lease contract. Then second condition will be what? Whether the customer has right to obtain substantially all the economic benefit from the use of the asset throughout a period of use. If the answer is no, then the contract does not contain a lease. If yes, then you need to ask third question, whether the customer has a right to direct how and for what purpose the asset will be used. If the answer is yes, then of course the contract will contain lease. If the answer is no, and if the supplier has the right to direct how and for what purpose the asset will be used, then of course the contract does not contain a lease. But sometimes this direction is predetermined. In that case, if the customer has the right to operate the asset or customer design the asset, in that case, of course the contract will contain a lease. So if it is predetermined, then when the customer operate the asset or design the asset, then contract will contain a lease. So this type of question can be asked in exam. Understood? This can be one of the question, but it will be case study based question. Normally now this type of question can be asked in MCQ format. Correct? Now let me come to one question which has been given. Let us come to this question. This newly inserted question can be asked in exam. What they have given? Case number 1. Scenario 1. The last mile is an identified cable that connect entity Y network with the customer device. So last mile is a dedicated cable. It is dedicated cable that connect entities Y's network with the end customer device. The use of this cable is at the discretion of the customer. So use of the cable is at the discretion of the customer. Yes, sir. Entity Y decide the location of endpoint and has a right to replace the line dedicated cable. However, it is not practical to replace the line. Means they have a right to substitute, but it is not practical to substitute it, since the replacement would require additional cost to be incurred without any corresponding benefit. Means it will not provide any economic benefit. Whether this arrangement would be within the scope of Ind AS 116? Yes, it is within the scope of Ind AS 116, because can I say it is dedicated cable. Means can I say it is an identified asset, as well as the right to substitute of supply is not substantive. Therefore, can I say there is an identified asset, and of course can I substantially all the economic benefit is derived by whom? Customer. And who has a discretion? Can I say the use of this cable is at the discretion of the customer. Means how and for what purpose the asset will use, that is decided by the customer. Therefore this contract contain a lease contract. Understood? Yes, sir. Scenario 2. If it is practical for the entity Y to replace the line and Y would benefit from this replacement, then can I say right to substitute become right to substitute of supply. The supplier right to substitute is now substantive. Therefore there is no identified asset and the contract will not contain a lease. Means first you need to write down all the condition, then give the conclusion for that if this is a question of 4 to 5 marks. Chalega? Yes, sir. Case number 2. Customer X enter into 10-year contract with the utility company. Entity Y for the right to use 3 specified physically distinct fiber. 3 specified physically distinct fiber within a large cable connecting Mumbai to Delhi. So 3 specified physically distinct fiber within a large cable connecting Mumbai to Delhi. Customer make the decision about the use of fiber by connecting each end of the fiber to his electronic equipment. Who is making decision? Customer has the right to make decision. Entity Y own extra fiber but can substitute those customer fiber only for the reason of repair and maintenance or malfunction. They will only substitute the fiber only when the repair and maintenance required. In can I say right to substitute is actually not substantive. They can only substitute when the fiber is not functioning properly. Then of course the substitution is required. The useful life of the fiber is 15 years. Whether this arrangement is covered under Ind AS 116, so of course can I say all the conditions satisfied, and therefore this will also contain a lease contract and we need to apply Ind AS 116. Got this point? You can write down. Case number 3. Customer X enter into 10-year contract with entity Y for the right to use a specified amount of capacity within a cable connecting Mumbai to Delhi. So they will use a specified amount, correct, of the capacity. Means can I say entire capacity is not used, only some portion of capacity is used. The specified amount is equivalent to the customer X having the use of the full capacity of 3 fiber strand within the cable, the cable contain multiple fiber with similar capacity. Entity Y makes decision about the transmission of data. Now, in this case, who is making decision? Entity Y is making decision. Means, can I say all the discretion right is with what? Entity Y. Entity Y light the fiber, make decision about which fibers are used to transmit the customer traffic. Means how and for what purpose it will be used is as per the discretion of supplier, not as per the discretion of customer. The useful life of the fiber. So can I say in this case it is understood that, can I say, the right to direct is with supplier, not with customer. Therefore contract will not contain a lease contract. Therefore this is outside the scope of Ind AS 116. This type of question can be asked because this is newly inserted question, till now not asked, can be asked. Just read the answer. How to write down? You are not supposed to write down this much. Only write down the meaning of lease, then write down all the condition. Don't describe that much in detail. Correct? Now write down one right, then give the conclusion about each case, then give the conclusion. So this much answer is not required. This much big answer is not required. I hope you have understood how to write down the answer. Correct? Write down your answer in your own words. Now coming to next point. This you have understood. Now separation of lease and non-lease component. So just try to understand separation of lease. First let us do separation of lease component. So it is quite possible. One contract might have multiple assets. Multiple asset can be considered as a single contract or multiple contract. If it is multiple contract, then we to apply Ind AS 116 separately to each contract. So what they want to say, two or more than two assets, means multiple asset will be considered as separate contract if two conditions are satisfied. If two conditions are satisfied, what they want to say, the right to use each multiple asset is considered as separate lease contract if both the following conditions are satisfied. Means it is same condition. If you have done Ind AS 115, so there we have done distinct performance obligation. So the same condition is given. If first the lessee can benefit from the use of the asset either by on its own or together with any other readily available resources in the market. Means it is capable of being used separately. If the asset can be used separately with some other asset, it means it is a distinct asset. Correct? Second condition is what? The underlying asset is neither highly dependent or nor highly interrelated with other underlying asset in the contract. Means they are not interrelated or interdependent with other underlying asset. Then they are separate asset and apply Ind AS 116 separately to different asset. However, if any one or both the condition are not satisfied, then multiple asset will be considered as single contract and we to apply Ind AS 116 together on multiple asset. Understood? Yes sir. This is known as separation of lease component. However, no question has been given in ICS study material regarding the separation of lease contract. Understood this point? Now this is important, separation of lease component from non-lease component. So one contract may contain lease component as well as non-lease component. So what Ind AS 116 says that we need to separate lease component with non-lease component, and lease component will be accounted as per Ind AS 116 and non-lease contract will be accounted as per respective Ind AS. How to separate? This will be separated based on the standalone selling price of lease and non-lease component. Means we need to estimate the standalone selling prices. Standalone selling price will be given the question. Based on that ratio, will allocate the total consideration in the ratio of what? Standalone selling price, and then we'll allocate. Correct? Now just try to understand, standalone selling price can be estimated by customer or supplier. Of course by supplier. So can you see there is some practical difficulty in separation of lease component, non-lease component by the customer. Therefore some optional exemption has been given. What optional exemption has been given? That any lessee, optional exemption has been given only to lessee, not to lessor. Means lessor will always separate lease component from non-lease component, but lessee के पास एक option है. Lessee has an option due to practical difficulty कि if they want to apply, then there is no need to separate lease component and non-lease component, and to entire contract they can apply Ind AS 116. What they are saying, what they want to say, Ind AS 116 provide practical expedient that permit lessee, only to lessee, to make an accounting policy election to account for each separate lease component of a contract and an associate non-lease component as a single lease component. But this particular option is only available with lessee. It is not available for lessor. If suppose a questions come for separation, so always will separate. Correct? Now we'll always assume that lessee has not exercised the practical expedient, means lessee has not exercised the option given under Ind AS 116 and will separate it. Understood? Separation will be done based on the standalone selling price given in the question. If suppose standalone selling price is not given, then we'll consider that lessee cannot separate it, and the both contract will be considered as, both component will be considered as single contract and will apply Ind AS 116. Understood? In this stage one question, let us do it. Let us do it. This is one question. This question, what they have given. Question 5 is 54 of my question bank. Entity X lessee enter into a lease agreement with entity Y lessor to lease entire floor of a shopping mall for a period of 9 years. The monthly lease rent is 70,000. Carry out this operation smoothly. Entity X simultaneously enter into another agreement, that is facilities agreement, with entity Y for using certain other facility owned by entity Y, such as passenger lift, EG set, power supply, infrastructure, parking space, etc., which are specifically mentioned in the agreement, for monthly service charges amounting to rupees 1 lakh. As per the agreement, the ownership of facilities shall remain with entity Y, means ownership is not transferred. Let's say incremental borrowing rate is 10%. The facility clearly specify that it shall be coexistence and coterminous with lease agreement. The facility agreement shall stand terminated automatically on termination or expiry of lease agreement. Entity X assesses that standalone selling price of lease agreement is 1,20,000 per month. What is standalone selling price of lease agreement? It is 1,20,000 per month, and standalone selling price of facility agreement is 80,000 per month. Understood? Yes, sir. Entity X has not elected to apply the practical expedient of Ind AS 116 of not to separate non-lease component from lease component. It is given. Even though not given the question, we'll always assume that they are not exercising this option. Correct now? Even though not given the question, because standalone selling price is given, so we need to separate it. And accordingly, it separate non-lease component with lease component. How entity X would account lease liability as on commencement date? So just try to understand what is the total consideration. Total consideration, you can see 70 plus 1 lakh, that is 1,70,000 per month. 1,70,000 per month. The total consideration is 1,70,000 per month. You can't say that 70,000 is for lease component and 1 lakh is for non-lease component. This is the total consideration, and the standalone selling price given 1,20,000 and 80,000. So 2 lakh become the total standalone selling price. So this 1,70,000 will be allocated in this ratio. So this allocation will be 1,02,000 and 68,000. So whatever agreed consideration is given, that is of course bakwas. You need to separate the total consideration in the ratio of standalone selling price, and as per that separation, the amount of lease payment will be 1,02,000. Now this 1,02,000 will be used to calculate present value of lease liability. Correct now? So you can see this is monthly. I think one mistake is in this question. They have given monthly lease rental. Monthly lease rental. Actually, this is the annual lease rental as per the solution given the question, because they have given monthly lease rental now. Correct now? But in the solution, you can see what they have done: year 1, year 2, year 9, and they have considered this monthly. But so what we'll assume, this is annual lease. So one correction you can do in the question: this is not monthly lease, this is annual lease. So your solution will become correct. I hope you have understood this point. Correct now? Got this point? You can see 1 lakh, 2,000 they have done. Then present value factor at the incremental borrowing rate, whatever is given, this will become the present value. This will be lease liability on commencement date. Chalega? Have you understood this point? So what will be the accounting treatment of this? This will be recognized as an expense as and when the services are provided. So this 68,000 allocated non-lease component facility will be recognized as an expense in PL as and when it is incurred. Means once the services are provided. Understood? Have you understood this particular point? Any doubt about this? This is a question which can be asked in exam. So this can be a simple question but can be asked in exam. But this point, any doubt? Follow. Yes sir, no sir, bolte jao. Any doubt in this question? No doubt. Now coming to lease account. We'll do lease accounting. First we'll do in the books of lessee. Then we'll do in the books of lessor. First we'll do in the books of lessee, then we'll do in the books of lessor. Now let's see, there are two words, inception of lease and commencement of lease. They are two different terms. Inception of lease means what? The date of lease agreement or date of commitment by the party, whichever is earlier. Now commencement of lease will start when the underlying asset has, when the underlying asset is supplied to the lessee, then the lease commencement date will start. So it is quite possible inception date and commencement date may be different. We'll do accounting of lease from commencement date, not from inception date. Not from inception date, but from examination point of view, whenever question is silent, inception date and commencement date will be always same. Always same. Understood? Yes, sir. Now coming to lease term, what do you mean by lease term? So lease term means what? Lease term means what? It is non-cancelable lease term. It is non-cancelable lease term. It is non-cancelable lease term. What do you mean by non-cancelable lease term? Non-cancelable period is that period which can be cancelled but upon payment of penalty. Correct now? So the non-cancelable period will be given in the question, or it will be given the question. So non-cancelable period will be given the question. So lease term is equal to non-cancelable period plus any period covered by an option to extend, means there can be some renewal option. So that period will be also added if the lessee is reasonably certain to exercise that option. If the lessee is reasonably certain that they will exercise the renewal option, then that extended period will be also added. Correct? Plus period covered by any option to terminate. Suppose they have given a termination option, the period covered by an option to terminate will be also added if the lessee is reasonably certain not to exercise the termination option. The lessee is reasonably certain that they will not exercise the termination option, so any period covered by termination option will be also added. Correct? Now, so this become what? Lease term. Correct? So can you say if the lessee is not reasonably certain to exercise renewal option, if the lessee is not reasonably certain to exercise the termination option, then the lease term will be only non-cancelable period. Non-cancelable period. Understood? Yes, sir. However, there may be some lease incentive given by some rent-free period. So if some rent-free period is given, that does not mean the lease term will not include rent-free period. Lease term will also include rent-free period, and lease term will start from the commencement date. Lease term will start from the commencement date. Understood? Yes, sir. Now coming to lease payment. Lease payment will include what? So it will include fixed payment. It will include in substance fixed payment. In substance fixed payment are those payments which are unavoidable. Correct? Less any lease incentive. So any incentive received from lessor will be deducted from lease payment. Any incentive which are received from lessor will be deducted from lease payment. Correct? It will also include variable lease payment that depend upon index or rate. So any variable lease payment which actually vary according to index or rate will be also part of lease payment. But there are two type of variable lease payment. Variable lease payment which depend upon index or rate, and variable lease payment which do not depend upon index or rate. When I say variable lease payment which do not depend upon index or rate, that is actually based on performance, sale or usage, so that are actually not included in lease payment. So any variable lease payment which not vary according to index or rate will not be included in lease payment, Be careful. It will also include a purchase option price. So suppose a purchase option has been given that at the end of lease term lessee can purchase the asset by paying this much exercise price. So that exercise price to purchase the asset at the end of lease term will be also a part of lease payment if the lessee is reasonably certain to exercise that purchase option. The lessee is reasonably certain to exercise that purchase option. It will also include payment of penalty if suppose the lessee is reasonably certain to exercise the termination option. So when you terminate the lease, so of course it is quite possible that lessee need to pay some penalty. So penalty will be also included in lease payment if the lessee is reasonably certain to exercise the termination option. It will also include residual value guarantee. Now what happens whenever purchase option is not given in the agreement? So purchase option is not given in the agreement, so of course lessee may have an intention to purchase the asset at the end of lease term. but there is no purchase option given in the agreement. So they will give a guarantee to the lessee that they want to purchase the asset at the end of lease term by payment of this price. So that is not included in the agreement, but if that guarantee is given, that is known as residual value guarantee. Residual value guarantee. So any residual value guarantee will be also added in the lease payment. That is known as guaranteed residual value. Guaranteed residual value. So guaranteed residual value will be also part of lease payment. Guaranteed residual value will be also part of lease payment. To lease payment including what? Fixed payment, in substance fixed payment as reduced by lease incentive, variable payment that vary according to index or rate, correct? Then purchase option price if lessee is reasonably certain to exercise that purchase option, payment of penalty if lessee is reasonably certain to exercise the termination option, correct? And residual value guarantee if the guarantee is given by lessee to lessor to purchase the asset at the end of lease term, correct? So this is what residual value guarantee is different from lessee point of view and lessor point of view. So I hope you have understood what is GRB from lessee point of view. Now what is GRB from lessor point of view? It is quite possible lessor has received guarantee from lessee as well as from third party. So can I say any amount which is higher, that will be guaranteed residual value from the point of view of lessor. So can I say residual value guarantee from the point of lessor will be the amount of guarantee given by lessee or on behalf of lessee or by any third party which are financially capable, whichever is higher. However, from examination point of view, GRB of lessee and GRB of lessor is always same. Till now they have not given a different GRB from lessor point of view. Understood this point? Have you understood this much? Any doubt? Have you understood this much? Follow. Any doubt? So one thing we have understood that variable payment which do not vary according to index or rate will not be included in lease payment. That will be recognized as an expense as and when they are incurred. The lease payment will not include payment allocated to non-lease component and variable lease payment that do not depend upon index or rate. Understood? Now let us come to lessee accounting. Now for lessee accounting, what they want to say? Just try to understand what they want to say. For lessee accounting, first we need to find out, is the lease is a short-term lease or lease of low value asset. If the lease is a short-term lease or lease of low value asset. Now what is short-term lease? Short-term lease means the lease term is 12 months or less than 12 months on the commencement date and there is no purchase option price there. So that will be known as short-term lease. Correct? Now means on commencement date, if the lease term is 12 months or less than 12 months and there is no purchase option price, then the lease will be considered a short-term lease. Lease of low value asset depend upon judgment. What is low? That depends upon judgment. So that will be specified in the question that this is low value asset. Understood what I am saying? Correct. So for this, an option has been given. Either lessee can avail recognition exemption or they can do general accounting or they can follow general accounting. So this option given to lessee is also what? An option given, means this exemption is an option given. So when they opted for this option, they are not supposed to recognize ROU asset in lease liability. Means in this case, they will recognize ROU asset and lease liability. ROU asset account debit lease liability if the lease is not a short-term lease or it is not a lease of low value asset, then they need to recognize an ROU asset and lease liability. But in this case, if they avail the recognition exemption, then they are not supposed to recognize the ROU asset and lease liability. In this case, the total lease payment, find out total lease payment. This will be recognized as an expense over the lease term on SLM basis or any other appropriate method whatever is given in the question, or any other appropriate method. So or any other method which is what appropriate. Understood? So this total lease payment will be recognized as an expense over the lease term either on SLM basis or any other appropriate method whatever is given in the question. Suppose they have given production unit method, to based on production unit method recognize the expense. Got this point? Have you understood this particular point? Means normally in exam they will ask this case. This point can be asked as a MCQ question from my point of view. From my point of view. This much you understood? Have you understood this much? Follow. Have you understood this much? Correct. That is only mentioned here. You can read it. You can read it. Now coming to accounting treatment. Accounting treatment in the books of lessee. In the books of lessee. What will be the accounting treatment in the books of lessee? So can I say initial recognition on commencement date they will pass one journal entry ROU asset account debit lease liability. So this will be what amount? This lease liability will be equal to present value of all the lease payment. Present value of all the lease payment on commencement date discounted by using two rate of interest. Discounted by using two rate of interest. First preference will be given to interest rate implicit on lease, and if that is not given the question means that cannot be determined, then second preference will be given to lessee incremental borrowing rate. So what do you mean by lease liability? Lease liability means what? Lease liability means what? On commencement date, a lessee initially measures the lease liability at present value of remaining lease payment to be made over the lease term discounted by using interest rate implicit in the lease, or the rate cannot be readily determined, then lessee incremental borrowing rate. Means simple word, whatever rate is given in the question. But if both are given, first preference will be given to interest rate implicit in the lease. Interest rate implicit in the lease. Understood? Now what is interest rate implicit in the lease? That we'll discuss in the books of lessor, because this is calculated from lessor point of view, not from lessee point of view. Therefore here option is given. If suppose it cannot be determined by lessee, then use lessee incremental borrowing rate. Understood? Correct. Lease liability. Then ROU asset will be equal to, normally from examination point of view, ROU asset will be equal to initial measurement of lease liability. Normally this is given. Correct now. Then ROU asset will be equal to initial value of lease liability plus by some other information given in the question. So if suppose they have given is some payment has been done before commencement date. Some payment has been already made before commencement date. So of course can I say that is not a lease liability, but that is known as prepayment, and that prepayment will be considered as ROU asset. So payment made to the lessor before commencement date, correct, reduced by any lease incentive. So any lease incentive received by the lessee, so that will be also reduced. So any payment done before commencement date as reduced by any lease incentive received from lessor. Correct? Understood this point? Any initial direct cost incurred by lessee, any initial direct cost to bring the ROU asset in working condition will be also capitalized, will be added, plus any present value of estimated cost of restoration, dismantling of underlying asset as per the Ind AS 37. A provision will be required that will be also added to the cost price of ROU asset. This will be also added. This become the cost price of ROU asset. Correct. Normally these all informations are not given in exam question till now, so they have not given. If given, consider it not given, then ROU asset will be equal to what? ROU asset will be equal to initial value of lease liability. Chalega? Understood? The first journal entry you have understood? First journal entry you have understood? Correct. Now for initial direct cost incurred by the lessee, what journal entry will do? ROU asset account debit to bank. So this will be capitalized to ROU asset. Correct. Then subsequent measurement. Can a subsequent measurement, the lease liability will be subsequently measured at amortized cost. Amortized cost by applying discount rate whatever you have used. What journal entry will do? The lease liability account debit to bank means, and the difference will be financial charges. Correct. So you need to calculate interest expense. So lease liability account debit, finance charges account debit to bank. Of course you can prepare one amortization cost table. Based on that you need to calculate interest expense, journal entry will be reduction of liability. Correct. Financial charges account debit to bank. For any variable lease payment that are not included in lease liability means any variable payment which do not vary according to index or rate, that will be recognized as an expense as and when they are incurred, but normally this type of information is not given in the question. Now last, for charging depreciation on ROU asset, so journal entry will be depreciation account debit to accumulated depreciation or ROU asset. But be careful in this, when ownership of the asset is transferred at the end of lease term. If ownership will be transferred at the end of lease term, then depreciation will be based on useful life of the asset. not lease term. Be careful about this point. Normally student do mistake. If the ownership is transferred at the end of lease term, then depreciation will be calculated based on useful life, not based on lease term. But when when ownership is not transferred at the end of lease term, correct now, means that if the asset will be transferred to lessor at the end of lease term, then depreciation will be calculated based on useful life or lease term, whichever is lower. Understood? So subject to this, the depreciation will be calculated as per the requirement of Ind AS 16. As per the requirement of Ind AS 16. Chalega? Understood this point? Correct. So this become the accounting of lessee. So this become very simple. However, there are two important topics from which question can be asked. One is remeasurement, other is modification. Remeasurement, modification. So this we are supposed to discuss remeasurement and modification from examination point of view. Remeasurement and modification. Now remeasurement means what? Whenever we do reassessment of any factor on which lease liability is dependent, then that is known as remeasurement. For example, reassessment of lease term is initially lease term was non-cancelable period because the lessee was not reasonably certain to exercise renewal option. But after some time, lessee becomes certain to exercise renewal option, then the lease term will become non-cancelable period plus the period covered under renewal option. So lease term require reassessment. Similarly, reassessment of purchase option price. Correct. Similarly, reassessment of variable lease payment that vary according to index or rate. Similarly, reassessment of residual value guarantee. Understood? So this can be the possible reassessment. So whenever reassessment is there, so we need to first calculate revised liability on remeasurement date. Correct. Based on the reassessment. So this will be present value of remaining lease liability, remaining lease payment, present value of remaining lease payment. Then compare with the carrying amount of lease liability on the date of remeasurement. The difference will be known as adjustment to ROU asset. This difference is known as adjustment to ROU asset. Means this will be either added or deducted from ROU asset. Means can I say if the revised liability is more than carrying amount of liability, we need to increase the liability, then what generator will do? ROU asset account debit to lease liability. But if revised lease liability is less than carrying amount of lease liability, we should reduce liability, then your generator will be lease liability account debit to ROU asset. It is very simple. Only need to be careful about one point. Whenever there is a reassessment of lease term or reassessment of purchase option, then we'll use revised discount rate on the date of remeasurement. That will be given the question. Then you have to calculate revised lease liability based on the revised discount rate. Otherwise, always use original discount rate. Original discount rate means the discount rate what you have taken in original accounting, initial accounting. That discount rate take. Only be careful about this point. So whenever there is a reassessment of lease term or reassessment of purchase option price, you will use revised discount rate. Otherwise, you will use what? Original discount rate. This much have you understood? Any doubt? There is only one question based on this. We'll take that question. Have you understood this particular point? Have you understood this particular point? Bolo yes sir. Yes sir or no sir? Remeasurement have you understood? You can see in remeasurement there is no changes. There is no changes in agreement. Agreement remains same. This is only reassessment of the factor which will consider to calculate for the calculation of lease liability. So it has been reassessment of the factor. For example, reassessment of lease term, reassessment of purchase option price, reassessment of residual value guarantee, whatever. Understood? Have you understood this much? But when we say modification means what? Changes in agreement. So whenever question says like that, there is some amendment in the terms and condition, it means it is a question of modification. Otherwise, it is a question of remeasurement. Understood this much? Bolo. Have you understood? Any doubt? No doubt. So let me first consider one question for remeasurement. However, this question has not been given in expected question. I will like to take because there is only one question that can be asked in exam. If I will not take, then revision cannot be done. I will take that question. The question 32, question 32. Come to 32. It is a question of 32 of my question bank. Remeasurement, only one question is there. NTW enter into a contract for lease of retail store with entity J on Jan 1, 2070. This is what commencement date or inception date, because nothing is given, so inception date and commencement date will be same. The initial term of lease is 5 years with a renewal option of further 3 years. So there is a renewal option. The annual payment for initial term and renewal term is 1 lakh and 1,10,000. Okay, for the first 5 years it is 1 lakh, then it is what, 3 years. The annual lease payment will increase based on the annual increase in the CPI at the end of preceding year. This can I say this is the lease payment is variable lease payment, because that will vary according to a CPI, means consumer price index, correct now. But for example, the payment due on 1/1/2018, from this it is understood that lease payment is at the beginning of the year. So normally you need to always find out lease payment is payable at the beginning of the year ki at the end of the year. Normally student do mistake यहाँ पर, so be careful about lease payment. Write down lease payment. Correct? Understood? Lease payment, if specified in the question, then do as per the question. Understood? Means it can be either payable at the beginning or payable at end. This can be specified in the question. In this given question, it is given that lease payment are due on 1/1. 1/1 means at the beginning of the year. Correct? Now, sometimes it is given that lease payment are made in arrear or in advance. So if they say in advance, advance means at the beginning. In arrear means what? At the end. This point have you understood? So this is also given in the question only. But if the question is silent, then always assume it is payable at the beginning. Then always assume it is payable at the beginning. Understood this point? Have you understood? If the question is totally silent, question has not given any information whether the lease payment are payable at the beginning of the year or at the end of the year, so we'll always assume it is payable at the what? Bolo? At the beginning of the year. This point have you understood? Normally student do mistake यहाँ पर. This point have you understood? Got this point? Everyone respond. Have you understood? Normally when it is payable at the beginning, student do mistake. Whenever it is payable at the end, student don't do mistake. So payable at the beginning, be careful, because for Y0, whatever lease payment is there, for that discounting factor will 1. So be careful about that. Understood? Chalega? Yes, sir. Now coming to remeasurement, the balance part of this question. NTW incremental borrowing rate at the lease inception date and 1/1/2020. So of course from the question it is understood 1/1/2020 will be remeasurement date is 5% and 6%. They have given original discount rate and revised discount rate, and CPI at lease commencement date and on 1/1/2020 is 120 and 125. So of course lease payment will change due to changes in CPI. At lease commencement date, NTW did not have significant economic incentive to exercise the renewal option. Correct. It means can I say lease term initially will be 5 year only, because they do not want to exercise the renewal option. In the first quarter of 2020, NTW installed unique lease improvement into retail store with an estimated 5-year economic life. NTW determined that it would only recover the cost of improvement if it exercised the renewal option, creating a significant economic incentive to extend. It means can I say on the first quarter of 2020, now it is reasonably certain that they will exercise renewal option. So now there will be reassessment of lease term, and now the lease term will become 5 plus 3, 8 year from the beginning. 8 year from the beginning. So 1/1/2020 become what? Remeasurement date. 1/1/2020 become the remeasurement date. Is NTW required to remeasure the lease in the first quarter? Now the question is that whenever there is a reassessment of lease term, you will use original discount rate or revised discount rate? पहले ये बताओ. Whenever there is a, first answer my question. Whenever there is a reassessment of lease term, will use original discount rate or revised discount rate for remeasurement? बोलिए. बोलो. Will use the original discount rate? Hello. 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 The voice is audible? Hello. 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 Ah, audible ना? Everything is audible? Yes sir. चलो ठीक है. So revised discount rate, it will be based on revised discount rate, but you can see here we have variable lease payment also. So variable lease payment when changes, so we need to use, whenever there is a variable lease payment changes, means when we'll do reassessment of variable lease payment, because that need to be done. For that we need to use original discount rate. So whenever there are two reassessment, the revised discount rate will prevail over original discount rate. So whenever there are two reassessment, revised discount rate will prevail over original discount rate. This point have you understood? So revised discount rate will prevail over original discount rate, because in this case there are two reassessment. One is reassessment of lease term, one is reassessment of variable lease payment. So be careful about that. So here revised discount rate will prevail over original discount rate. This point have you understood? Correct. Now let us come to the solution. Let us come to the solution. Come to the solution. So I have already have a solution for this. Right. The solution you can see already I have done. So you can see y0. If I will try to explain the question, y0, what is the CPI given 120? Y0, what is the lease term 5 year? 5 year. And Y0, what is the lease payment? So Y0 lease payment is 1 lakh, 1 lakh, 1 lakh, 1 lakh, 1 lakh based on this CPI. Now Y1, there is no changes CPI. So there is no changes CPI. So CPI remains same because CPI changes at the beginning of what? Why at the beginning means on 1/1/2020 at 1/1/2020. So here the CPI remains same, that is 120. Therefore, the lease payment will remain same. Similarly, on Y2 also the CPI remains same. CPI remains same. Therefore, lease payment remain same. But in Y3 the CPI changes. It becomes from 120 to 125. Therefore, we'll do reassessment of what? Lease payment. And similarly, on 1/1/2020, there is a reassessment of lease term, and now the lease term become 8 year. So out of 8 year, how many year expired? 3 year expired. So remaining year become 5 year. 5 year. For the first Y4, Y5, it will be 1 lakh, 1 lakh. For Y6, Y7, Y8, it will be 1,10,000, 1,10,000, 1,10,000. But we'll do reassessment by taking new CPI. So we'll do 125 divided by 120, and we'll try to calculate the revised variable lease payment. Revised variable lease payment. Understood? This is the question given in the, this is the information given in the question. Now let us do. First, we'll calculate lease liability and ROU asset on commencement date based on the initial assessment. So we have how many year? 5 year. At the beginning of the year, lease payment is 1 lakh, 1 lakh, 1 lakh, 1 lakh. Present value factor at 5% will be 1. So first year it will be 1. Be careful. This is only danger. Normally when student use the annuity factor now, so annuity factor what they will do? They will do divide equal to 5 times, and they will calculate wrong present value factor. Annuity factor. So be careful when you are using annuity factor. Correct? When you are using annuity factor, be careful. So here, because lease payment is at the beginning of the year, it will start with 1. Be careful about that point. So this become what? Lease liability, and because there is no other information given about ROU asset, lease liability and ROU asset will be same. Right. Now can you say we'll find out the carrying amount of lease liability and carrying amount of ROU asset at on remeasurement date? On remeasurement date means 1/1/2020, means at the end of third year, we can say at the end of third year. So we'll first find out carrying amount lease liability. Whenever lease payment is at the beginning of the year, so your format should be like this: first opening liability, then lease payment, then calculate interest. Means interest will be calculated on this balancing figure, only this balancing figure. So this format should be carefully used. Normally what we do opening liability, then we do first plus interest expense. But whenever lease payment is at the beginning of the year, be careful. First opening liability, then lease payment, then interest, then closing liability. So you can easily calculate it. Opening liability was already calculated. This amount will come. Then lease payment is 1 lakh. Then interest at the rate of 5%, closing liability, and this amount can be easily calculated. Then we'll find out carrying amount of ROU asset at the end of at the end of third year. So it means we need to charge depreciation on that. Because in this case ownership is not transferred at the end of lease term, can depreciation will based on lease term, and lease term is 5 year. So 4,54,600 we have divided by 5, and this will be depreciation. So this can be the closing balance of carrying amount of ROU asset at the end of third year. At the end of third year. Understood? This much you understood? Any doubt? Well, this much you understood. Now we'll calculate revised liability. Revised liability, because of reassessment, because of remeasurement, we will find out revised lease liability on remeasurement date. For that, can I say we need to find out revised lease payment? Revised lease payment. So there are 2 reassessment lease term. So now we'll start with Y4, Y5, Y6, Y7, Y8. Y4, Y5, Y6, Y7, Y8. And then we'll find out the revised lease payment based on the new consumer price index. So we'll do 125 divided by 120. The first 1 lakh into 125 divided by 120. This will be also same, but here it will be 1,10,000 into 125 divided by 120, and we can find out revised lease payment. Then we'll find out present value factor at revised discount rate, that is 6%. That is 6%. Now only I want to ask one question. This discounting factor will be what? This discounting factor, can you give me the present value factor of this? because this is y4, this is beginning of y4, correct now. This is beginning, means this is actually y3, y4, y5, y6, y7. This is the beginning of year 3. This is beginning of year 4, beginning of year 5, beginning of year 6, beginning of year 7, beginning of year 8. चलेगा. My question, yes, very good. This will be 1. This will be 1. Normally student do mistake यहाँ पर भी. Normally student do mistake यहाँ पर. Be careful. This will be 1. Correct. This will be 1. Very good. This will be 1. Be careful about that. Be careful about that. Normally I have seen student do mistake. They will take discounting factor for y3. Discounting factor not for y3. This become now y0. This become now y0. Understood? So this become revise this liability. Understood? Now compare revise this liability with the carrying amount of original liability. So you can see there is an increase in liability. This will be adjusted to ROE asset. What journal entry will do? ROE asset account debit to this liability with this amount. Then if you want to find out carrying amount, revised carrying amount of ROE asset, that also you can find out. The carrying amount already be calculated. So this will be added and this will be revised carrying amount of ROE asset. Revised carrying amount of ROE asset. Done. Understood? Have you understood this point? Any doubt? Remeasurement done. Now let us come to modification. Come to modification. The modification we have understood, whenever there is changes in the agreement, then it is a question of modification. The modification can be of 3 types. Either it can be increase in the scope, या changes in the scope, या changes in price, या changes in lease term. So this will be a modification due to changes in the agreement. Due to changes in the agreement, either there will be changes in the scope, there will be some addition or deletion of underlying asset, or changes in the lease term, either there will be increase or decrease in the lease term, or there will be changes in the price, either increase or decrease in the consideration, means lease payment. This can be the modification, but there should be changes in the agreement. There should be some changes in the agreement. Now modification are of 2 types from accounting point of view. What Ind AS 116 say that modification can be a separate lease contract. It may not be a separate lease contract. If it is a separate lease contract, then modification will be accounted separately as per Ind AS 116. But if it is not a separate lease contract, then adjustment need to be done in the original contract only. So of course in exam, always they will ask when the modification is not a separate lease. When modification is not a separate lease, that only will be asked in exam. So when modification is a separate lease, what they say, there are 2 conditions. If that 2 conditions are satisfied, then modification become a separate lease. Then accounting will be done separately. Then it will not be adjusted with original contract. First condition is what? Modification increases the scope of the lease by adding 1 or more underlying asset, and the consideration for the lease increases by the standalone selling price of the increase in the scope. If these 2 conditions are satisfied, then modification is a separate lease, and then it will be accounted separately as per Ind AS 116. Correct? However, if it is not a separate lease, then adjustment need to be done in the original accounting. So normally they will ask modification is not a separate lease. Correct? Understood? Now just try to understand. Everyone, just try to understand. Means if you see modification, I have already said modification is separate lease. It means increase in the scope, increase in the price, which commensurate with the standalone selling price of the increase. Then apply Ind AS 116 separately on additional asset. On additional asset, this type of question they will not ask. Now not a separate lease, either it will be, either there will be no termination, either there will be no termination. No termination means what? There is no termination of the lease contract. It means what? There will be either increase in the scope, increase in the lease term, increase in the price, or decrease in the price. Whenever there is no termination, means whenever there is increase in the scope, increase in the lease term, increase in the price, or decrease in the price, then we say there is no termination. There is no termination, only there is a modification. There is no termination, only there is a modification. So if there is no termination, there is only modification, then we have to first find out modified lease liability on modification date less original lease liability, and the difference will be adjusted to ROE asset. You can see this similar to remeasurement. Similar to remeasurement, find out modified lease liability by using always revised discount rate. Here always it will be present value of modified lease payment discounted by using revised discount rate. Means in case of modification, always use revised discount rate. Understood this point? So it is as simple as whatever you have done for remeasurement. It is as simple as. So whenever there is increase in scope, sunna. Whenever there is increase in scope, increase in price, decrease in price or increase in lease term, so there is no termination, there is only modification. But whenever there is decrease in scope, means some asset has been surrendered, either full or partial, or decrease in lease term, either some lease term has been cancelled or entire lease term has been cancelled, so it will result in full or partial termination. Normally in exam they will not ask full termination, they will ask only partial termination. So in this case there are 2 points. First you need to find out, first you need to do termination accounting and then do modification accounting. In this step number 1, what first calculate gain or loss due to termination, gain or loss due to termination, correct, due to full or partial termination. If there is a full termination, then there is no modification. Full termination they will never ask, they will ask partial termination only, correct. Now so first you need to find reduction in lease liability, reduction in lease liability due to due to uh, due to partial termination, then reduction in ROU asset due to partial termination. This difference will be either gain or loss on termination. Means can I say if 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 this is more than this, the reduction in lease liability is simple, but this reduction in lease liability means gain and reduction in ROU asset means loss. If gain is more than loss, so it is the net gain or loss on net gain on partial termination. If loss is more than gain, then it will be net loss on partial termination. Then what journal entry will do? Journal entry will be based on what? Is gain or loss on partial termination. So lease liability account debit to gain or loss account debit to lease liability, that entry will pass. Means simple, means ऐसे कर लेंगे. Journal entry will be what? Lease liability account debit to ROU asset. The difference will be gain or loss. The difference will be gain or loss. But after that we need to do modification accounting. Step number 2 is what? Modification accounting. Understood? Modification. So modification accounting means calculation of adjustment to ROU asset due to modification. Once again, find out modification liability. Compare with the revised liability, means after reduction, what is the revised liability that you compare? This will be adjustment to ROU asset. This will be adjustment to ROU asset due to modification. Due to modification. Understood? Now this modified lease liability will be always calculated by using revised discount rate. By using revised discount rate. Got this point? Correct. Now when I am saying when you are calculating reduction in liability, so reduction in liability means what? Original liability. Correct. Less you need to find a reduced liability due to cancellation, means what liability is reduced. So when you are finding reduced liability, that will be calculated by using original discount rate only, because this is not modification. So calculated by using original discount rate. So when you are finding reduced liability, then it will be calculated by using original discount rate only. Whenever you are finding modified lease liability, then calculate by using revised discount rate. Understood this point? So for gain or loss on termination, if you are finding reduced liability, for that use only base original discount rate. Original discount rate. Understood? So this will be known as reduction in lease liability. Have you understood this much? Right. Can we take one question based on this? So I will take one question in which there will be modification as well as termination. Modification as well as termination. Only one question I will take. Means this type of question will be super easy. This type of question will be super easy, because in this there is no termination, to only find out modified lease liability, compare with the original lease liability on modification date. The difference will be adjustment to ROU asset. So this type of question I am not doing. I am coming to this point. Just try to understand. This point, have you understood that modified lease liability will be calculated by using revised discount rate? Have you understood this much? Have you understood this much? Yes, sir. Now, just try to understand, when you are doing gain or loss on partial termination, so you are actually terminating the original contract. So when you are terminating original contract, so that is what you need to find a reduced liability. due to termination, so that is on original contract only now. So you will use original discount rate or revised discount rate. For original liability, you will use original discount rate. Why you will use revised discount rate? So this is termination of original contract. So when you are doing termination of original contract, for that you are finding reduced liability after termination. So that will be always based on original discount rate. Original discount rate. Now understood? Now understood? Follow. Now understood? Everyone? Understood. Correct? But I hope this entire summary you have understood. Have you understood this summary? So whenever, what I am saying, whenever they have asked this type of question, this is super easy. You can do by your own. Now when they have asked this type of question, means there is what? There is either decrease in the scope or decrease in the lease term. Then it will be thoda sa interesting. We will take one question where there is a decrease in lease term. Means I will take a question of a combination of these two. That is also asked in exam, but can be repeated. Can be repeated. Come to one of the question. This is the question. Lessee enter into a 10-year lease for 2000 square meter of office space. The annual lease payment are rupees 1 lakh payable at the end of each year. It is given. Payable at the end of each year given. Now somebody asked me, sir, why if the question is silent, we'll assume payable at the beginning. Correct now. So I'll just give an explanation. Whenever you do any agreement of rental, you only say the lessor will demand payment at the beginning or payment at the end. What is the rational assumption? Always the lessor, because lessor will prepare agreement. Lessee will never write agreement. Lessor will write agreement. Correct now. And the lessee need to obey the terms and conditions given in the agreement. The lessor will always practically demand payment at the beginning of the year in advance only. You see any agreement, any rental agreement, I hope if you are residing in a rental property, you know that you are also paying rent in advance. So it means normally it is payable at the beginning. Therefore we are taking that rational assumption. And in one of the question ICA has also taken that assumption. So this is assumption as per ICA only. Chalega? Understood? Have you understood? Yes sir. Chalo. So interest rate implicit in the lease cannot be readily determined. SC incremental borrowing rate is given 6% at the beginning. At the beginning of year 6, something happened. Lessor and lessee agreed to amend. It is a question of modification. The original lease to include an additional 1500 square meter of space in the same building starting from the beginning of year 6. So this is increase in scope. So increase in scope will not result in termination. So this is only a modification. So again, this is only a modification. And reduce the lease term from 10 year to 8 year. So this is what decrease in lease term. So this will result in termination and modification. Understood? The annual fixed payment for 3500 square meter. Initially 2000, then added by 1500, 3500 square meter is 1,50,000 payable at the end of each year from year 6 to year 8. So you can see initially it was 1 lakh, now it become 1,50,000. SC incremental borrowing rate at the beginning of year 6 is now 7%. This is the revised discount rate. The consideration for the increase in the scope, they are saying that it is not a separate lease, therefore this will not be accounted separately. That information has been given, you can read it. How should the said modification be accounted for? Correct? So let me explain the solution. Ready the solution I have? You can see this is the question number. Question number 37. Okay, in this question, first we'll find out lease liability on commencement date, lease liability and ROU asset. So what is the lease payment? Lease payment is what? 1 lakh. 1 lakh. It is payable at the end of each year. So we can find out present value, present annuity factor for how many year? 10 years. So present value annuity factor. Present means annuity factor you can find out. Correct. This you can do and this you can calculate. And the same will be equal to ROU asset. This you can find out. 1 lakh payable at the end of each year for 10 years. This you can find out. Then we'll find out carrying amount of lease liability at the beginning of 6th year, means at the end of 5th year. So of course you can we can prepare one amortization cost table, because here the payment is done at the end of the year. So be careful. It will be opening liability, then interest expense, then lease payment, then closing liability. I hope this you are understanding. Are you able to understand my emotions? Emotions समझ रहे हो? Correct. यहीं पर गलती होता है. Normally गलती कहाँ होता है? गलती mistake you do whenever lease payment is at the beginning of the year. There normally student do mistake. So you can easily find out this. The lease payment at the end of 5th year. Similarly, ROE asset carrying amount will find out, will depreciate based on 10 year, because here so ownership is not transferred at the end of lease term. So divide by 10 into 5, this will be accumulated depreciation, and this is the carrying amount of ROE asset. Now whenever they have given decrease in lease term and increase in scope, so always first do termination wala accounting, because first termination then modification. You can't do first modification and termination. So first apply decrease in lease term, is first termination then modification, correct? So first we'll do point number 3, accounting treatment for decrease in lease term. Accounting treatment for decrease in lease term. So first we'll calculate gain or loss on partial termination, gain or loss on partial termination. So you need to find out reduction in lease liability. So you need to find out reduction in lease liability and reduction in ROE asset. So ROE asset is very easy. Just try to understand. This is the remaining right to use asset for how many year? 5 year. For how many year? 5 year. Correct. Now the lease term has been reduced from how many year to how many year? Forgot. Lease term has been reduced from 10 year to 8 year. Its remaining lease term will become from 5 year to 3 year. It means it will reduce. The right will be cancelled for how many year? 2 year. So this is the right for how many year? 5 year. We can find out proportionate right for 2 year, that has been reduced. Proportionate right for 2 year, that has been reduced. So simple reduction in ROE asset will be this amount multiplied by 2 by 5. So this will be reduction in ROE asset. Reduction in ROE asset. Understood? Correct. Now reduction in these liability. Correct. So can you say we need to find out reduction in these liability? So you can see this is original carrying amount. Can you see this is nothing but present value of lease payment, present value of lease payment for remaining lease term for remaining 5 year, discounted by original discount rate. Yes sir. So this become your original lease liability. Now it will be reduced for how many year? 2 year. It will be reduced for 2 year, means now we are supposed to pay only for 3 year. We are supposed to pay only for 3 year. So again, reduced lease liability will be present value of lease payment for 3 year, discounted by using original discount rate. Discounted by using original discount rate. So we will find out present value of lease payment for 3 year, discounted at original discount rate. So can I say will now pay only for 3 year. 3 year. So 1 lakh multiplied by present value factor for 3 year by using the original discount rate. So this will become your reduced liability. The reduction in liability will be this minus this. This minus this. Have you understood this calculation? This calculation I was just informing you. Have you understood? So you can see this has been calculated by using original discount rate. This has been calculated by using original discount rate. Have you understood this particular point? Follow. If you have understood this, then we can move. Normally you will do mistake in exam. You can see what we have done. We have taken 1 lakh because right now we are not considering modification. We are considering only the termination of original contract. So original lease payment was 1 lakh only. So 1 lakh is now payable only for 3 years. So reduced liability will be based on 3 years, not for 5 years. So it was for 5 years. We have calculated for 3 years. This will become reduction in liability. Reduction in liability. Have you understood this much? Original liability will be this only, na? This is original liability. Whatever you have calculated carrying amount this is not this. Sorry, my mistake. This liability. Sorry, this liability 4,21,090. This is original liability. Check. This was ROUS. My mistake. This is the carrying amount of original liability. So original liability, whatever you have calculated at the end of 5th year, that is original liability. Correct? Once again, this reduction in ROU asset you have understood. So reduction in ROU asset means what? This carrying amount was the right to use for the remaining 5 year. But out of 5 year, now we will not use for 2 year. So we'll do proportional reduction. If this is for 5 year, so how much for 2 year? So we'll do 3,67,950 into what? 2 by 5. So this is reduction in what? ROU asset. This ROU asset you have understood? Correct. Now coming to reduction in this liability, first we'll find out original lease liability. That is original lease liability. Already we calculated 4,21,090. That is the carrying amount of lease liability at the end of 5th year. Now that carrying amount of original liability is nothing but present value of remaining lease payment for 5 year, discounted by using original discount rate. But out of 5 year, now we'll pay only 1 lakh for the remaining 3 year. So what is the reduced liability? Reduced liability due to changes. The reduced liability will be present value of rupees 1 lakh payable for 3 year, discounted by using original discount rate, that become reduced liability. So this is the original liability, this is the reduced liability. The difference will be reduction in liability. So this is actually payment for the last 2 year, which we are not going to pay now. Correct. Or what you can do, this is nothing but 1 lakh multiply by discounting factor of y4 and y5. You can calculate this also will come same. So that is going to be reduced now. That is going to be reduced because you are not supposed to pay for 4th year. Fourth year means we can say 9th year and 10th year. 9th year and 10th year, but now it will become 4th year and 5th year. I hope you are understanding. Have you understood this point? Respond fast. Respond fast, everyone. This is the area where you will do mistake. So be careful about this point. Got this? Yes, sir. Now accounting treatment, please just try to understand. Now reduction in ROU asset is how much? 1,47,080. What you will do? And reduction in lease liability is 1,53,790. So our journal entry will be lease liability account debit this much, ROU asset account debit this much, and because this is more than this, so it will result in gain. So known as gain on partial termination. So this gain on partial termination will be transferred to PL. Will be transferred to PL. Understood? Correct. Now just try to understand when we are saying reduction in lease term. So there will be also modification. Modification will be also there. There will be some modification also. Whenever we are saying modification, the modification will be done with revised discount rate. So now calculation of adjustment to ROE asset due to decrease in lease term. Abhi we are not considering the increase in scope. That will be the third point of this. Correct now. So first we'll find out modified lease liability. So modified lease liability will be present value of lease payment payable for 3 years, discounted by using revised discount rate. So now we'll take 1 lakh present value annuity factor at this revised discount rate for 3 years. So this will come 2,06,400. This will be compared with the reduced lease liability. The reduced lease liability we have calculated 2,67,300. 2,67,300. So you can see there is a decrease in the liability. So this decrease in the liability will be adjusted to ROU asset. Understood this point? So whenever there is a decrease in lease term, first you will do what? First you will do termination, then modification. So now modified lease liability will be calculated by using revised discount rate. So 1 lakh is payable for the next 3 years. By you will do present value of that 1 lakh payable for the next 3 years, discounted by using revised discount rate. So this become modified lease liability. Compare with the actual reduced liability. This will be adjustment to ROU asset. So you can see your liability reduced. So what journal entry you will do? Lease liability account debit to ROU asset. Lease liability account debit to ROU asset. Have you understood this particular point? Now we'll come into increase in scope. Increase in scope. So some asset has been added. So this will also result only in modification. Only in modification. Now accounting treatment of for increase in the scope by adding additional space of 1500 square meter. So once again we'll find out modified lease liability. Now Your liability is not 1 lakh. Your lease payment is not 1 lakh. It become 1,50,000 payable for next 3 years. So 1,50,000 payable for next 3 years. We can find out modified lease liability. So you can see 1,50,000 discounted by using revised discount rate. So this become modified lease liability due to modification in scope, due to increase in scope. Now compared with 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 modified lease liability due to decrease in the lease term, this was now liability. So compare with this 2,62,400, and this will be increased. So this will be adjustment to ROU asset. Adjustment to ROU asset. One more journal entry will do ROU asset account debit to lease liability. ROU asset account debit to lease liability. This solution is as per ICI. Is this entire solution I have done as per ICI, but I'll just give you one shortcut if you want to apply shortcut in exam, but that will not be as per ICI. If you have understood this much, then I will just give you one shortcut. Have you understood this much? Just try to understand, because this is also adjustment to ROE asset. This is also adjustment to ROE asset. So basically, we can skip this. We can skip this. If we can skip this, then also our answer will be same only. So batao, what is the modified lease liability? This is the modified lease liability as per modification in scope. And what was our reduced liability? This was 2,67,300. 2,67,300. What is the adjustment to ROE asset? 3,93,600 minus 267,300. How much? 1,26,300. And you can see this is increase in ROE asset, and this is decrease in ROE asset 4,900. So this is nothing but dekho 1,31,200 minus 4,900. This is nothing but same amount will come. So you can skip that particular case, but that will not be as per IC solution. You will be taking risk. Your marks will be deducted. So if you have understood this, follow this in exam. Follow this in exam. However, practically you can do in this way. Practically you can do it this. This is shortcut, I will say. I hope you have understood this point. Any doubt? Any doubt? Now, therefore, I am explaining as per my solution, right? I also know ICI solution is totally bakwas. They have given what in what way means totally not from student point of view. Therefore, this chapter I am explaining as per my solution, as per my solution. Correct now? And therefore, I always say at the last moment, don't read solution from ICI book. If you read solution from ICI book, suppose you have taken classes from me, but I have seen the student read ICI solution. Don't read ICI solution. You are wasting your time. You are wasting your time, because ICI solution is totally hodgepodge. Now, if you will try to understand from ICI solution, you will die. If you have taken classes from me or any other faculty, read solution, whatever your faculty has given, they will give in some designed way, some simplified way. Understood? Now, but normally student will read ICI book, ICI study matter at last moment. अगर पढ़ना तो पहले पढ़ते ना, पहले नहीं पढ़ाई करते. Now, in the last moment, they will read ICI solution. Totally wastage of time, and that's why students surrender in the last moment. I will say stick to you whatever you have followed from the beginning. And because of that reason, you have taken classes now. If you have taken classes, so we have simplified the solution. To use the solution given by your faculty. Given by your faculty. Understood? Krishnamurthy, you have written no sir. No sir means what? Abhi yare Divya, if you want to find out this solution now, so already in my Telegram channel, I have given class notes of my regular batch. But abhi right now, don't change this, Baba. Is last moment, Divya, are you my student or you have taken classes from some other faculty? Divya, are you my student or you have taken classes from some other faculty? You're my student only, then so you have these notes now. Then why are you asking these notes, Nalayak? Chalo. Now, this also you have understood. So can I say modification is completed from my point of view? Now let us come to lesser accounting. lesser accounting. Lesser accounting, just try to understand. Whatever I will say, just try to understand. Now, in the books of lesser, for accounting, we need to find out whether the lease is a finance lease or it is not a finance lease, means it is an operating lease. There are 5 indicators given. I think that 5 indicator is, if you want me to read, I can read also. So it will be a finance lease if any one of the condition, any one of the indicator exists. First, the lessee will transfer the ownership of the lease asset at the end of lease. It is a finance lease. Second, the lessee has an option to purchase the asset at the end of lease term at a price which is sufficiently lower than the fair value of the asset when the option become exercisable. Correct. Third, the lease term is for a lease term cover a the lease term cover major part of the economic life of the asset. Then fourth one is what, on inception of lease, the present value of lease payment substantially cover the fair value of lease asset on inception date. Correct. Then last point, the asset is of such a specialized nature that it can be used by only lessee unless major modification is being made. Correct. Now, normally from exam point of this 5 indicators there. If one indicator exists, it is a finance lease. Otherwise, it will be a operating lease. Now, when I am saying this particular point, this is required for calculation purpose. What they want to say, on inception date, the present value of lease payment amount to at least substantially all of the fair value of the asset. So here substantially means what, 90% from examination point of view. Means if the present value of lease payment is 90% or more than 90% of the fair value of the asset, we will assume that it is substantial and it will be finance lease. Similarly, the lease term is for the major part. The major part is not defined. So if it is 75% or more than 75% of the economic life of the asset, so from examination point of view, we will say it is what? It is a finance lease. Correct. These are the indicator. I hope you know. I'm not going into much discussion. Now coming to the accounting. Now for accounting purpose, we need to find out whether lessor is a manufacturer or dealer of underlying asset or non-manufacturer dealer. When I am saying he is a manufacturer dealer, his underlying asset is in inventory. Then finance lease will be treated as a sale of inventory and revenue will be recognized. Understood. However, if he is not a manufacturer, not a dealer, then he is a financer. Financer means he is acting like a bank. Then underlying asset is not an inventory. Then finance lease will be treated as sale of any other asset. So in this case, we'll pass one journal entry. Receivable account debit to revenue means if he is a manufacturer or dealer, we'll pass one journal entry. Means let us come to what? The accounting treatment directly. What they want to say? If he is a manufacturer or dealer, first let us see if he is a non-manufacturer or dealer. Let me explain Rasa by writing. What they are saying, if it is a non-manufacturer dealer, then we'll pass one journal entry. Is receivable account debit to asset, and the difference will be gain or loss on sale of asset, and this will be transferred to PL. This asset will be de-recognized at carrying amount. You need to find out what is this amount. So this amount is known as net investment. The lease. Now net investment means what? Present value of gross investment, present value of lease payment plus present value of UGRV. Correct. At this point. So net investment means what? Present value of lease payment plus present value of UGRB. Now present value of lease payment is what? Present value of agreed lease payment plus present value of GRB. So GRB also will be included in lease payment plus present value of UGRB. Present value of UGRB. So this is the net investment. Now UGRB is nothing but expected residual value minus GRB. Expected residual value minus GRB equal to what? UGRB. Suppose the lesser expectation is what? At the end of lease term, the value of the leased asset will be 1 lakh, but they have been received a guarantee of only 80,000. The UGRB will be 20,000. UGRB will be 20,000. Understood? So if you can calculate the present value of this becomes the net investment. Now this will be discounted by using interest rate implicit on lease. Interest rate implicit on lease. Now what Ind AS 116 says that interest rate implicit on lease will be the rate of interest at which present value of lease payment plus UGRB, present value of lease payment plus UGRB will be equal to fair value of asset plus initial direct cost plus initial direct cost plus initial direct cost. It means, can I say this, the rate of discount has been designed in such a way that present value will include initial direct cost which is incurred by lessor. Means, can I say in this way, lease receivable, practically speaking, this is nothing but fair value of the asset plus initial direct cost incurred by the lessor. So lease receivable will be always inclusive of initial direct cost by non-manufacturer or dealer. In case of non-manufacturer or dealer, this is what initial accounting for non-manufacturer dealer. However, they have given two questions. In both the question, the answer has been given from manufacturer point of view. If the question is silent in exam, give answer from manufacturer point of view, not from non-manufacturer point of view. So till now, they have not given any question based on non-manufacturer. They have not given any question based on non-manufacturer. But I hope you have understood whatever I am saying. Now coming to manufacturer dealer. So for manufacturer dealer, what first journal entry will do is receivable to revenue. Is receivable to revenue because this sale of inventory. Now this amount will be equal to lower of point number A, fair value of the asset. Point number B, present value of lease payment discounted by using market rate of interest. So here discounting will be done at market rate of interest, not at interest rate implicit on lease. Understood this point? Correct? Means, just try to understand, whenever there is no GRB, no UGRB, but it means the inventory. Normally if it is inventory, now inventory will be sold for the entire economic life. So there is no concept of GRB, UGRB, then this present value will be always equal to fair value. Means if there is no GRB, there is no UGRB, the present value of lease payment will be always equal to GRB. But if there is some GRB, UGRB, then present value will be less than. Means if there is some UGRB, then this present value will be less than what? Fair value. It means the inventory has been given for not for entire economic life. Have you understood? Second is what? You need to also recognize cost of sales. The cost of sales account debit to inventory. So this will be at carrying amount. Now what Ind AS 116 says, the cost of sales will be equal to carrying amount of inventory minus present value of UGRB. It means there will be some portion which will be also taken into consideration about present value of UGRB. So that will become the lease receivable account debit. So this is nothing but present value of UGRB. Means, can I say this plus this will be equal to total lease receivable, which is nothing but fair value, which is nothing but the fair value of the asset, This is the accounting in the books of manufacturer or dealer. Have you understood this much? I will take one question. From that question I will try to explain the all accounting. Have you understood this much? Because only one question of this nature has been given. Means one thing is clear, that in the case of manufacturer dealer, this lease receivable will be excluding initial direct cost. Means in case of non-manufacturer dealer, lease receivable will be inclusive of initial direct cost, but in case of manufacturer dealer, the lease receivable will be excluding initial direct cost. So initial direct cost incurred by the manufacturer or dealer lessor will be recognized as an expense on commencement date. Will be recognized as an expense on commencement date. And so this is the entire accounting treatment. Got this point? Yes, sir. Now let us take one question. So what I will do, I will try to explain that question from both point of view. Suppose they ask non-manufacturer dealer, so you should be careful about that. Is the question? A company manufactures. Manufacture means he is a manufacturer. Specialized machinery. The company offers customer the choice of either buying or leasing the machinery. A customer chooses the lease the machinery. Customer chooses to lease the machinery. Details of the arrangement are as follows. The lease commences on 1st April 2001 and lasts for 3 years. The lessee is required to make 3 annual rental payment in arrear. In arrear means payable at the end of the year. Payable at year end. The lease machinery is returned to lessor at the end of lease. It is not transferred for the entire economic life of the asset. The fair value of machinery is 1,50,000, which is equivalent to the selling price of machinery. Selling price of the, okay sir, the machinery net. Why my pen is not working? Hello? Now okay? Is the voice audible? 1 minute, hold on. Voice is audible? We are doing this question. What they are saying, machinery cost is 1 lakh to manufacture. The lessor incurred cost of which 2 lakh 1,500 to negotiate and arrange the lease. So this is IDC, initial direct cost, and the cost price of machinery is 1 lakh. The expected useful life of machinery is 3 years. Correct? So expected life, useful life. This is useful life, not economic life. This is useful life of the asset is 3 years, and the lease term, the lease commences on the 1st April 2001 and lasts for 3 years. Correct? Yes, sir. The machinery has an expected residual value of 10,000 at the end of 3 years. So this is the expected residual value. The estimated residual value does not change over the terms of lease. You can see in this question GRV is not given, then entire expected residual value will be UGRB. To UGRB will be equal to 10,000 only. Now interest rate implicit in the lease is given 10.19%. Now just try to understand. Normally for manufacturer dealer we don't require interest rate implicit on the lease. We require market rate of interest. So if in your actually this is not correct. This is not correct. This word, whenever we are saying interest rate implicit on lease. As per Ind AS 116, it is calculated by taking IDC into consideration. But for manufacturer dealer, we don't consider IDC into consideration for calculating present value. I hope you're understanding. So whenever for manufacturer dealer, interest rate implicit on lease is given, so we'll assume this is what market rate of interest only. We'll assume it is market rate of interest and do accordingly. So don't be confused much in exam, because of course this is a discount rate, we will do discounting on this. So if you apply more concept, you will die. Correct this point. So how should lessor account for the same? So let us do this question. I will explain my solution. You can see. As per Ind AS 116, for manufacturer dealer, lesser revenue will be recognized at a lower of fair value of underlying asset, that is 1,50,000, and present value of lease payment discounted at market rate of interest, that is given 10.19%. It is given 10.19%. Correct. Now present value of lease payment is present value of agreed lease payment plus present value of GRB. In this question GRB is nil, but in your exam question GRB can be there. Therefore I have written present value of agreed lease payment plus present value of GRB. So GRB is nil. So it is what? 57,500 payable for 3 years, discounted by 10.19%. This will come around 1,42,530. So whichever lower, the revenue will be 1,42,530. First point, have you understood? Second, cost of sales will be recognized as a difference between carrying amount of the asset minus present value of UGRB. So carrying amount of the asset minus present value of UGRB. So carrying amount is nothing but cost price. So cost price given 1 lakh. We need to find out the present value of UGRB by using the same rate of discount to 10,000 is payable. That 10,000 is actually receivable at the end of third year. So 10,000 present value factor for 3 years. If you multiply by this, so this will come 7470. And you can see this will become 92530. 92530. Now coming to the selling profit. Selling profit means what? Revenue minus cost of sales. So revenue is this, cost of sales this. This becomes the selling profit, which will be recognized automatically in SOPL. Which will be recognized automatically in SOPL. Got this point? Yes, sir. Now coming to journal entry. First journal entry, lease receivable account debit to revenue at the amount whatever we calculated. Then we recognize cost of sales. So cost of sales account debit to inventory. So cost of sales is 92,530 and the inventory is 1 lakh. And we'll also recognize unguaranteed residual value as lease receivable. So lease receivable will be 7470. Correct. And then there's one initial direct cost that will be recognized as an expense on commencement date, and that expense can be cost of sales. So we'll pass one more journal entry, cost of sales to bank, that is 2,500. In your ICS solution, they have given one compound journal entry. So they have given this compound journal entry. You can see lease receivable will be this plus this will be always equal to fair value. Understood this point? So there is some approximation difference that you can ignore. There is some approximation difference that you can ignore. I hope you have understood this point. So you can see they have accounted lease receivable 1,50,000. Then cost of sales will be equal to this plus this. That is cost of sales. Then to bank is whatever payment we have done, 2,500. Correct. Then to revenue this will come, and underlying asset will be de-recognized. The inventory will be de-recognized at 1 lakh. So in your ICS solution, they have given this compound journal entry. This is not easy to understand ki what is this baba. So this is actually the accounting treatment as per separate transaction, I hope you have understood this. So this you can pass in exam. If you have not understood, means if you want to follow ICS solution, then pass this. But once you have understood separate journal entry, can I say compound journal entry you can do? Compound journal entry you can do. Have you understood this? Then subsequent accounting will recognize interest income. Correct. So lease receivable to finance income by applying discount rate, so that we can do on 1,50,000 10.19%. Then amount will be received bank account debit lease receivable. This journal entry will be done for next 2 years. Next 2 years this journal entry can be done. Correct. Understood. Now on the last date, can you say? So the inventory has been, the asset has been taken back. Whatever the outstanding balance of this receivable will be equal to GRB plus UGRB. This amount will be equal to the GRB plus UGRB. and we'll take back the asset and we recognize inventory at that amount. This will pass one more journal inventory account debit lease receivable, because that will be the outstanding balance of lease receivable. So lease receivable de-recognized and inventory will be again recognized in the books of lessor. Understood? Correct. You can do this calculation of finance income. Yes, sir. Have you understood this point? I hope you have understood. Normally they will ask from manufacturer or dealer point of view, they will not ask non-manufacturer dealer. If they ask non-manufacturer dealer, so of course they will give you interest rate implicit on lease based on the, by considering that IDC into consideration, then do whatever I have said, then your accounting will be lease receivable to asset, and the difference will be gain or loss on sale. To lease receivable will be at net investment will be present value of what? Lease payment plus present value of UGRV there. Present value of lease payment plus present value of UGRV. Understood? Correct? Yes, sir. So that I think that they will not ask this. You have understood. Now coming to the next point, I think accounting you have understood. And lesser accounting we have done. This you can all read by your own. Now for lesser incremental borrowing rate, there is no concept of lesser incremental borrowing rate. There is only concept of interest rate implicit on lease. Let's see, there is concept of interest rate implicit on lease plus lessee incremental borrowing rate. Now accounting for operating lease, this is very easy. So whenever there is operating lease, so the total lease payment will be recognized as an income over the lease term on SLM basis or any other appropriate method, whatever is given in the correct now. So that will be accounted as follow. One question has been given regarding this, that is important. That type of question can be asked now in MCQ also. So I will like to do that question also. Newly inserted question hai. Question number 7. How will entity account for the incentive in the following scenario? Entity Y enter into an operating lease of the property with entity X for a 5-year term at a monthly rental of 1,10,000. So 5 year and 5 year into 12, it is 60 month. In order to induce the entity X to enter into lease, entity Y provides 6 lakh entity X at a lease commencement for lessee improvement. Means they have given some lease incentive. So 6 lakh is lease incentive. What is the total lease payment? It is 1,10,000 into 60. It will be how much? It will be 66 lakh minus 6 lakh lease incentive. The total lease payment will be lakh divided by 60 months. You can see your lease income will be 1 lakh per month. Your lease income will be 1 lakh per month. What will be the journal entry that we need to understand? The journal entry, first we have received some lease incentive on the date of contract only. So we'll consider it as what? Deferred lease incentive account. So we'll say deferred lease incentive account to cash 6 lakh. Then at the end of the each month we receive how much? 1,10,000 at the end of each month. So cash account debit 1,10,000. To lease income will be 1 lakh as per our calculation, and can you see the balance will be automatically adjusted in the lease incentive. So deferred lease incentive will be adjusted with 10,000. Understood this particular point? This is first scenario, can be asked in exam. Second scenario, what they have given: entity Y enter into an operating lease of the property with entity X for a 5-year term at a monthly rental of 1,10,000. The point, at lease commencement, entity Y provides 6 lakh the entity X for leasehold improvement, which will be owned by entity Y. Which will be owned by entity Y. The estimated useful life of leasehold improvement is 5 years. Means whatever improvement has been done, that will be actually owned by entity Y. So can I say that 6 lakh should be accounted as property, plant and equipment? That will not be deferred lease incentive. Means in this case, whatever has been paid, 6 lakh, that will be property, plant and equipment, the property, plant and equipment to cash. Now monthly income is 1,10,000 into 60. From this will not minus lease incentive. Divide by 60. So your lease income will be also 1,10,000. So cash account debit lease income 1,10,000. And then depreciation will be on this based on the useful life. I think useful life has been given how much? 60 year only. Life. The useful life has been given a 5 year, so 60 month only. So depreciation has been calculated a monthly basis only. So divide by 60, so it is what 10,000 per month. Just simple. This question can be asked in exam. Newly inserted question. Now this finance lease lease modification. There is no question till now given in ICI study material. So this you can read by your own. आप खुद पढ़ लीजिए. Sub lease you read by your own. Sub lease also there is no good question given, but I hope you can do it by your own. The sub lease you read by your own. You want me to do sub lease? Correct now. So whenever there is sub lease, you need to understand what will be the accounting treatment in the books of intermediate lessor. Intermediate lessor means lessee for head lease, lessor for sub lease. So that accounting treatment we need to understand. So it is based on whether the sub lease is an operating lease or finance lease. If it is an operating lease, then will not de-recognize the ROU asset which is coming in the books of intermediate lessor. Will not de-recognize the lease liability. Only whatever is the total lease payment for sublease will be accounted on SLM basis as lease income, and that accounting will be done. But if it is a finance lease, then what general entry will do? Will do lease receivable to ROU asset. ROU asset will be de-recognized and lease receivable will be accounted at net investment. So there will be lease receivable as well as lease liability. On this lease receivable, we recognize interest income. On this lease liability, we recognize interest expense subsequently. But ROU asset will be de-recognized. This you can do by your own. Just do it. There is no question, good question of this nature in ICI study material. But can be asked in exam with MCQ format. So just read it. Just read it. One question of sublease. There is no question given in ICI study material. I need to create a question right now. देखो, a creation of question will take time. Creation of question will take time. Correct? Understand what I am saying, Aravindam? Simply just try to understand ना. It is based on, अभी मैं अगर ऐसा बता देता हूँ. Suppose initially there was head lease. Suppose this is the in the books of lessee I am doing. 1 lakh was payable for 5 years. We recognize ROU asset and lease liability as per Ind AS 116 that you can do. Then same has been subleased for 1,10,000. So first you need to find out whether it is a finance lease or operating lease, and based on that you do accounting. Finance lease, you will need to de-recognize the ROU asset and recognize the lease receivable. Correct now? Understood? Lease receivable to ROU asset at net investment. Then lease receivable do subsequent accounting. Lease liability do subsequent accounting. But if it is operating lease, so will not do anything in this. Will be accounted as it is. And whatever total lease payment receivable, that will be recognized as a lease income over the sublease term on SLM basis or over the lease term. Okay, sir? Or any other appropriate method. Now the last point from which I want to take a question is the sale and leaseback transaction. Sale and leaseback transaction, there is only one question. That question is only important. Correct now. So sale and leaseback transaction, I think concept you know. Let us take that question. Sale and leaseback transaction. There is some matter that we need to understand. So this is a question of sale and leaseback transaction. What they have given. An entity seller or lessee sells a building to another entity, buyer or lessor, for a cash of 30 lakh. Immediately before the transaction, the building is carried at a cost of rupees 15 lakh. So the cost of the carrying amount of building is 15 lakh. The sale price is what? 30 lakh. At the same time, the seller or lessee enter into contract with the buyer or lessor for the right to use the building for 20 years with annual payment of 2 lakh payable at the end of each year. 2 lakh is payable at the end of each year. The terms and conditions of transaction are such that transfer of building by the seller or lessee satisfy the requirement for determining when performance obligation is satisfied in Ind AS 115. Now what Ind AS 116 says that the transfer means whether if the sale, whatever transfer of goods has been done by the seller is regarded as the sale as per Ind AS 115, then to it is a sale and leaseback transaction. But if it is not a sale, means the control has not been transferred to the buyer, then it will not be regarded as sale, be considered as financing transaction. So in that case, in the books of seller or lessee, we recognize a financial liability. In the books of buyer or lessor, we recognize a financial asset, and will apply Ind AS 109 to that. To that type of question they will not ask, because that will become a question of Ind AS 109. Understood now? Right. Therefore, that type of question they have not given. It is given the sale is regarded as sale as per Ind AS 115. The fair value of building is at 27 lakh. You can say sale price is 30 lakh, but a fair value is 27 lakh. So this is known as off market term. So sale has been done at off market term. Therefore, some adjustment need to be done for off market adjustment. Initial direct cost is nothing. Initial rate of interest is interest rate implicit on lease is 12%. Buyer or lessor classify the lease as an operating lease. How should the said transaction be accounted by seller, lessee, and buyer, lessor? So in this, what is the process? Let us understand. Correct? Let us understand. In the books of first seller or lessee, first we'll do off market. Step number 1 is off market adjustment. Off market adjustment. So here we compare fair value with the sale price with fair value. The sale price is more than fair value, so difference will be considered as additional financing received from the buyer. So this is additional loan received from the buyer. So 3 lakh whatever we have received extra, 3 lakh whatever the seller has received extra, that will be known as additional financing received from whom? From buyer. But if suppose this is 27 lakh and this is 30 lakh, so this whatever less amount received, 3 lakh less amount received, that will be considered as prepayment to the buyer, and that will be adjusted to ROE asset. But this type of question has not been given in ICS study matter. Normally we consider they will ask this question only. Chalega? Understood? First step is off market adjustment. Second step, we need to calculate lease liability. So first we'll find out total liability. Now 2 lakh whatever is payable at the end of each year. So Ind AS 116 says that it has two components. Some amount is payable for lease, some amount is payable for loan. Some amount is payable for lease, some amount is payable for loan. So first we'll find out total liability. Total liability will be present value of annual payment discounted by using the rate of discount given. This 2 lakh is payable for how many year? It is payable for 20 year, discounted at a rate of 12%. We can do it. This will come 14 lakh. This will come 14 lakh 94,000. Now out of total liability, can you say what is the fair value of loan component is additional financing received? So that become the financial liability. What is the financial liability? 3 lakh. So balance will be known as lease liability. 14 lakh 94,000 minus 3 lakh, which was the initial loan received from the buyer. So the balance will whatever you are paying, that is for lease liability. So this 3 lakh the 3 lakh is what? Loan liability, financial liability, and 11 lakh 94,000 will be lease liability. Understood? Yes, sir. Now allocation of annual lease payment. Now whatever you are paying 2 lakh, that will be allocated to lease component and loan component in the ratio of their fair value. So can you say lease component, loan component? So fair value already we calculated 11 lakh 94,000 and 3 lakh. So this becomes the total amount. So this annual lease payment will be allocated in that ratio. Annual lease payment will be allocated in that ratio. So we now have understood out of 2 lakh, how much is payable for lease and how much is payable for loan transaction. Understood? Now we'll do measurement of ROE asset on commencement date. So what Ind AS 116 said that ROE asset will be now measured initially based on the proportionate carrying amount. To what simply they say that total fair value of building is what? 27 lakh, and carrying amount of building is what? 15 lakh. Correct? So this is the total fair value of building. This is the total carrying amount of the building. Now just try to understand, whenever I have given one asset, whenever I have sold one asset, means I have sold my building, but again I have taken that building on lease, but not for the entire economic life. I have taken for what? Certain period, Correct. Now suppose the economic life of the asset was 50 years, but I have taken back the asset for 20 years. It means some right has been retained and the some right has been transferred. So for the 20 year I have retained the right, and for 30 year I have transferred the right. So what Ind AS 116 say that you need to calculate gain or loss only on the portion of the right which has been transferred. Any portion of the right which has not been transferred, any portion of the right which has been retained, for that you should not calculate any gain or loss. It means ROU asset will be measured based on the carrying amount of the asset for the right retained, for the right retained. So this is the just right one. This is the fair value of total building. This is the fair carrying amount of total building. Now what is the fair value of ROU retained? That is 11,94,000. So we can find out what is the proportionate carrying amount of ROE retained. What is the proportionate carrying amount of ROE retained? The one formula we can say is nothing but carrying amount multiplied by carrying amount multiplied by lease liability. This lease liability divided by fair value. So one formula we can say carrying amount of building multiplied by lease liability divided by fair value building. This will be the carrying amount of ROU retained. Carrying amount of ROE retained. Have you understood this particular point? Carrying amount of ROE retained. Follow. This formula, this is nothing but a proportionate calculation. If you want to by heart the formula by heart, carrying amount multiplied by lease liability divided by fair value. But if you forget, use this concept. Please use the cross multiplication. You will never forget. Correct now. ROE retained means what? Just try to understand what I want to say. Suppose the building has been given, the economic life is 50 years. So it has been sold and then again taken back for 20 years, let us suppose. So it means the building has not been sold for the entire 50 years. Building has been sold only for 30 years. Means some right of the building has been retained. 20-year right has been retained. So we should calculate only gain or loss for the 50 year ki for 30 year. So gain or loss should be calculated for the right transferred. The right has been transferred for how many years? 30 years. So we need to first find out carrying amount of that RU which has been retained for 20 years. So that is based on the proportionate calculation. So this is the fair value of total building. This is the carrying amount of what? Total building. This is the RU retained. This is the fair value of RU retained. So what is the proportionate carrying amount of RU retained? This is cross multiplication. Carrying amount multiplied by lease liability divided by fair value. So you will find out carrying amount of RU retained means out of 15 lakh, how much carrying amount of RU retained? That is 6,60,333. Understood? It means the carrying amount of RU transferred will be this minus this. Understood? Yes, sir. Then the last step will work calculation of gain or loss on the right which has been transferred. First we'll find out total gain. Fair value minus carrying amount. Fair value is 27 lakh. Carrying amount is 15 lakh. 12 lakh is the total gain. But this gain cannot be recognized because only the gain related to right transferred will be recognized. So now we'll calculate gain relating to ROE retained. That will not be recognized. So any gain relating to ROE retained will not be recognized. So we'll find out that portion of gain by using the same formula. So can you say this will be equal to total gain multiplied by lease liability divided by fair value proportionately. So total gain multiplied by lease liability divided by fair value. This will be the gain relating to ROE retained. The balance will be the gain relating to ROU transferred. So this much gain will be transferred to profit and loss account. Understood? Now we can pass one journal entry. You can see, but our bank account debit, how much we have received? 30 lakh. Correct. What will be our ROU asset? 6,60,333. Correct. Can you say our financial liability will be 3 lakh? Our lease liability will be 11,94,000, and building will be de-recognized at carrying amount 15 lakh, and the difference will be the gain on right transferred, that is 6,69,333, which will be transferred to PL. So this will be one journal entry. This I have given one compound journal entry. However, institute has done this much only. After that, they have not done any accounting journal entry. But after that also we can do. Okay, this ROU asset will be depreciated for how many years? 20 years. So depreciation kar diya. Then on this lease liability, we recognize interest expense and the payment will be done. So interest expense will be calculated based on 12%. So there are two interest expense. One is on lease liability, one is on financial liability. So you can see this multiplied by 12%, this multiplied by 12%, this become what? Total interest expense. Then we have done payment of 2 lakh, but how much payment done for lease liability and how much payment done for financial liability, that is also allocated in step number 3 only. So this is allocated portion of 2 lakh, so that has been payment done. But this much accounting has not been done in IEC solution. I have done that also. Now, this छोड़ दो. Now coming to buyer and lessor. Now in the books of buyer, can I say a reverse entry will do? So they have purchased building at a fair value of 27 lakh, and whatever extra amount they have paid, that will be financial asset. Two, can I say to bank 3 lakh? This will be the journal entry. Correct. Now, can I say on financial asset we recognize interest income, financial asset account debit to interest income at 12%, and then we receive bank account debit to financial asset that 2 lakh proportionate amount, whatever 40,160. Correct. Now coming to leasing, lease is an operating lease. So we'll find out total lease payment. So total lease payment will be this portion which has been allocated lease company into multiplied by 20. This will become the total lease payment, will be recognized on SLM basis. So SLM basis this amount only. Then it will be bank account, whatever you have received for lease portion to what lease income, that will be transferred to PL. That will be transferred. Then of course on building also depreciation charge, but the building they have not given the useful life, therefore we cannot do any journal entry for building depreciation. This is the entire solution. However, in solution they have done only this journal entry. They have done this journal entry. Chalega. With this we completed all the concept of Ind AS 116. All the concept we have done. This COVID days one COVID-19 concept, this is not at all important, just delete it. COVID-19, this presentation and disclosure you can do it. All other points we have done. Correct. Now one more question is there. That is also a very good question that can be asked in exam, because till now not asked. This you do by your own. Question number 8 I can explain also. चलो read कर लेते हैं, because this is MRQ must revise question, is fully expected. Philfresh Limited, the company, is into manufacturing and retailing of FMCG product listed on Stock Exchange of India. One of its product is bathing soap, is the company sales under the brand name Philfresh. Correct. So Philfresh Limited is into manufacturing and retailing of FMCG product. So they produce one soap known as Philfresh. The company does not have its own manufacturing facility for the soap, and therefore it enter into an arrangement with a third party to procure the soap, to purchase the soap. The company enter into a long-term purchase contract of 10 years with Messrs Radhe. Following are the relevant terms of the contract with Messrs Radhe. Messrs Radhe has to purchase a machine. As per the terms of the contract, Messrs Radhe need to purchase one machinery costing rupees 10 lakh from the supplier. Correct, as specified by the company. So they need to purchase one machinery from one specified supplier as said by Philfresh Limited. The machine will be customized, produce the soap as designed by the company that will manufacture the soap. This machine cannot be used by Messrs Radhe to produce the soap or buyer other than the company due to design specification. This machinery can be used only by Messrs Radhe to produce the soap for Philfresh Limited only. The machine has a useful life of 10 years, and a straight line method of depreciation is the best suited considering the use of the machine. The company will pay rupees, company means Philfresh Limited, 4.75 per soap for the first year of contract. This is calculated based on the budgeted annual purchase of 7 lakh soap as follow. So you can see variable cost of manufacturing will be 4 rupees. Cost of machine, so it will also include, means that this cost price will also include the cost of machine. So this is 1,74,015 divided by 7 lakh. So how this amount has been calculated, that we need to understand. 0.25. Messrs Radhe margin, Messrs Radhe का margin कितना 0.50 means profit margin of Messrs Radhe. The total become 4.75. So 4.75 will be paid for 7 lakh soap. For 7 lakh soap. In case the company purchase more than 7 lakh, that is budgeted number of soap in the first year, then the cost of machine will not be paid for the soap purchased in excess of 7 lakh unit. Suppose they are purchasing 8 lakh, so for 1 lakh they will not pay this amount, they will pay only the variable cost and the margin. However, in case the company procure less than budgeted number of subs, suppose they are only purchasing 6 lakh, then the company will pay the differential unabsorbed cost of the machine at the end of the year. For example, if the company purchased only 6 lakh stop in the first year, then differential amount will be the 1,74,015 minus 6 lakh into 0.25, so that is remain unabsorbed, so that will be paid extra by the Philflash Limited. Correct. Variable cost will be actualized at the end of the year. Okay, sir. The cost per shop will be calculated for each year in advance based on the budgeted number of shop to be produced each. Every year the cost per shop will be calculated. An amount of rupees 1,74,015 shall be considered each year for the cost of machine for 1 year to 8 years while calculating the cost per shop. Any differential under absorbed amount shall be paid by the company to Messrs. Radhe at the end of that year. That already said, a charge of 1,74,015 per annum for the machine is derived using a borrowing cost of 8% per annum. For 9 year and 10 year, only variable cost and margin will be paid. Like the present value means, if you calculate, is if you think the present value of this for 8 year at this, it will be equal to 10 lakh. That is nothing but 10 lakh we have 10 lakh has been paid by the 10 lakh has been paid by the Messrs. Radhe to purchase that machine, and that is recovered from whom? That is recovered from Philflash Limited by way of this only 1,74,000, including the interest element. Messrs. Radhe does not have any right to terminate the contract, but the company has right to terminate the contract at the end of each year. Is who can terminate the contract? The company. Messrs. Radhe cannot terminate the contract. However, the company terminate a contract, it has to compensate Messrs. Radhe for any unabsorbed cost of the machine. Correct? At this point, I hope you understood that they need to pay the amount to the company. In the first year, company purchased only 5,50,000 shop at 4.75 per shop. Evaluate the contract of the company with Messrs. Radhe and provide necessary accounting entry for the first year in accordance with Ind AS with working note. Assume all cash flows occur at the end of the year. देखो, in exam this question difficult because nowhere it is mentioned lease. Now first though you need to find out whether the contract contain lease. Yes, the contract contain lease because can I say there is one identified asset? Correct. Second, can I say the for that asset the customer means who is the customer? Philflash Limited is able to derive all the substantially all the economic benefit from the use of the asset, because this cannot be used by the Messrs. Radhe to manufacture any other shop for any other company. Correct. And right to direct the use, can is the right to direct the use is also with Philflash Limited, because the Messrs. Radhe does not have any discretion to terminate a contract. Yes sir. No. So it means all the conditions satisfied, therefore contract contain a lease. Now lease term will be 10 year, no doubt. Lease term shall be 10 year. Understood? Yes sir. Now identification lease payment, can I say there is one in substance fixed payment, that is what? That is 1,74,015, which is not avoidable. They need to pay in any case, so this become in substance fixed payment. However, variable payment which is paid for the purchase of shop, that is what vary according to the purchase contract. That is not in substance fixed payment, that is the variable payment based on the usage, etc. So that will not be a part of lease payment. So only 1,74,015 into 8 will be the total lease payment. Yes sir. Now let us do the initial accounting. So of course when you do journal entry in the books of what? In the books of Philflash Limited. As Philflash Limited. So Philflash Limited become lessee. Who become the lesser? Messrs. Radhe become the lesser. I hope you are understanding. Are you able to understand what I am saying? So in this first journal entry, ROU asset account lease liability, if you will calculate 1 lakh, the amount 1,74,015 into present value annuity factor for 8 year. What was the rate? 8%. If you calculate this will come 10 lakh only. Check karo. It will come 10 lakh. Check it. It's coming 10 lakh approximately. Check it. Full. Yes, sir. So this is the present value of lease payment only. So this 1,74,015 is the in substance fixed payment. So that is lease payment. So this will recognize the present value of lease payment. Now interest expense will recognize interest expense account debit to lease liability at 8%. 8% calculated. Depreciation will be calculated. Divide by 10 करेंगे. So divide by 10 will do. Correct now. Now lease liability account debit to payment. So this will be deemed to be paid. Even though we have purchased 5,50,000 swap, but the entire amount to be paid, so 1,74,015 will be deemed to be paid. Understood. Now variable payment paid, whatever variable payment is paid, that is recognized as expense, or it can be considered as inventory account debit to bank because they have purchased swap. So I will say this will be inventory account debit to bank. Inventory account debit to bank will be 5,50,000 into only variable payment. Variable payment was 4 and the margin was 0.5. So 4.5, this will be the variable payment. Understood? Correct. Have you understood this point? This question also you do. So with this we have completed all the good question. One more question is there. It's also good question that I think you can do by your own, but I will only do. Let me do by your own. I think this last question you have understood. Come to this question also. This is also not yet asked in exam, can be asked in exam. Entity X is an Indian entity whose functional currency is Indian rupee. It has taken a plant on lease from entity Y for 5 years in the use in its manufacturing process, for which it has to pay annual rental in area. In area means at the end in 10,000 US dollar. On the commencement date, the exchange rate was 68. The average rate for year 1 was 69, and at the end of year, the exchange rate becomes 70. The incremental borrowing rate on commencement of the lease was borrowing commencement of the lease for US dollar borrowing is 5%. This is the discount rate. How will the X Limited measure the ROU asset and lease liability? First, we need to find out lease liability. So that lease liability will be based on $10,000. So you can see $10,000 payable at the end of each year. Now, first, you will convert this lease payment in rupees, or first you will calculate present value. This is the dot. First, calculate present value. First, calculate present value in dollar. First, calculate present value in dollar. Then this you multiply by using the exchange rate on commencement date. Exchange rate on commencement date is 68. So this will be the lease liability. And this will be only equal to ROU asset. So first journal entry will do lease liability is ROU asset account debit lease liability 29,44,400. This you have understood. Now we'll do amortization cost table. To amortized cost you will calculate by using dollar only. You can see initially it was 43,300. This was in dollar. Correct. In this you'll apply rate of discount means interest rate. So first you'll calculate interest rate 2165 on this amount, then minus 10,000. So this will be this amount 35,460. And can I say this become a lease liability at year end 1? Lease liability at year end 1. So this will be multiplied by exchange rate at year end 1. So what is the exchange rate at year end 1? Exchange rate at year end 1 is how much? 70. So exchange rate at year end 1 will be 70. So you will do into 70. And this interest expense will be recognized by using the average exchange rate. By using the average exchange rate. What is the average exchange rate? That is 769. So you can see interest expense which will be transferred to PL will be 69 multiplied by 2165. So we'll pass one journal entry interest expense to lease liability, that is 1,49,385. And lease liability account debit to cash. So lease liability account debit to cash. Payment will be done. Payment will be done on the basis of what? How much is done? 10,000. 10,000 into 70 is what actually happened. Just try to. I will say better use this format. You'll be able to understand. So this is US dollar. This is exchange rate. This is INR. So initial lease liability was how much? Initial lease liability was how much? 43,300. What was the exchange rate? Exchange rate was 68. 43,300 into is equal to is 29 lakh 44,400. Then interest at 5%, 43,300 into 5%, that is 2165. As per India's 21 income and expense, if nothing is given, will apply average rate. Average rate is 69 into 69, that is 1 lakh 49,085. Then lease payment, this is 10,000. This will be converted by using the exchange rate of payment date. Payment has been done at the end of the year, 70, will be 7 lakh. 7 lakh. The amount is coming how much? 43,300 plus 165 minus 10,000. This is coming 35,465. This amount is coming 2 lakh 29 lakh 44,400 plus 1 lakh 49,385 minus 7 lakh. That is coming how much? 23 lakh 93,785. Correct. Now can you say as per India's 21, this is a monetary item. Monetary items should be recorded at closing rate. So 35465 closing rate is what? 70. We'll convert this into 70 also. 35,465 into 70. How much it is coming? Coming 24 lakh 82,550. So this is known as exchange loss, and exchange loss will be transferred to PL. You can calculate. This has not been given in solution. This will be exchange loss as per India's 21, which will be transferred to PL. And depreciation will be calculated on ROU asset based on the lease term. Depreciation has been also calculated. You can see depreciation has been calculated on this amount, and I think they have done divided by 5 now. Divided by 5 they have done. This is the depreciation. Achha, they have also calculated exchange loss. Exchange loss, how much they have calculated? 88,760. So 88,000 कितना आ रहा है? Minus 23, 93. Same amount is coming 88,760. They have also calculated. Okay, sir. Chalega. This is also one good question which can be asked in exam. It is not yet asked in exam, but they asked, you can do some small calculation mistake. I hope you have understood the entire chapter from my point of view. Done. So abhi right now this much only. I will take a break. So we'll meet again at 3 p.m. So 1 hour break. Okay. Zoom at 3. Okay, sir. Break. An hour. After that, we will start in days 1. Okay, sir. Got this point? I think lease in days 116 has been completed. Am I right or not? Thank you. I think 116 has now become easy. Now don't do mistake in exam. Don't do mistake in exam. I think whatever point I have said, stick to that. Now in the break time, if you want to do some remaining question of India's 116 that you do by your own, correct now. I think most of the point I have covered. All the questions I have covered. I think now only small questions are there that you just read it. Chalega. Thank you very much. For this session, we'll meet after 1 hour. Hello. Now, once again, welcome everyone. Yes, I think lunch has been done. Have you taken your lunch? बोलिए. Just try to understand this. Whatever the time period is going on right now, this is very important. I have already said this is very important time period, and this time period, a lot of thoughts will come. Because when you are preparing for exam, of course, suddenly what will happen? You will start thinking about what will happen when the result will come, whether you will be able to pass, whether you are not able to pass. Of course, that thought will come. But at that moment, what you should do, that you should stop for 2 3 minutes, relax, and just switch your mind and come back to your study. Don't think much, otherwise you will be diverted and you'll be wasting your 1 or 2 hours. You will not be able to realize. Understood now? Because that situation, once you think about that particular point, when result will come, what will happen, this will create panic in your mind. Of course, this is normal situation, it will come in your mind. When I was giving my exam, a lot of time the same thing used to come in my mind also. But at that moment, what I used to do, that I used to take some break, a 2 3 minute break, just switch our mind, come back to study, come back to study. Understood? Normal, it is normal only when we think much about result, but we need to right now concentrate on preparation. Right now, process is more important than result. Okay, think about process, think about process, that how you are getting to, how you can cover up more and more syllabus from examination point of view. Got this point? Yes sir. Now, of course, we'll start Ind AS 102 right now. And I hope you have understood Ind AS 116. Have you understood Ind AS 116? Everyone. Those who joined late, I think by this time you have also completed Ind AS 116. Got this point? The, have you understood Ind AS 116? Have you liked the revision? Have you liked the revision? So, of course, if you have liked the revision, just don't forget to press the like button. Okay, correct? Because your, once again I will say, your every like button will give us motivation to come again for the revision class. Okay, understood? Yes sir. And if you are new to this channel, don't forget to subscribe this channel always, because someone has said me that always in every video you should say this. Correct now, then only the subscription will come, otherwise subscription will not come. Someone has informed you, one of the My friend has said me that you need to always say in your YouTube video that subscribe my channel, subscribe my channel. And only the student will subscribe. Otherwise, they don't have time to subscribe. Chalo, theek hai. I am also accepting that thing, and I started also saying like this in every video. Okay, sir. Now coming to India's 102. Now, from my point of view, India's 102 is only a game of question. Means as per the concept, you know everything about a concept. Only in the question you need to understand what need to be taken care. So in this chapter we'll do only question practice. Only we'll do the discussion about question. Can we start with the question? Because can I say from my point of view, share based payment you have understood from concept point of view. Am I right or not? Am I right or not? Fully. Chalo. So can we start with the question number one, which question number 10 of my India Saaransh book? Can we start? Let's start. Ankita Holding Incorporation grant 100 shares to each of his 500 employee. So this is a 500 employee given, and what is the number of option? 100. Always whenever you are reading the question now, circle all the date and the amount given in the question. This is the best way to just focus on the amount and date. As on 1st Jan 2001, provided the employee remain in the service during the vesting period, the shares will vest at the end of the first year if the company earning is more than 12%. So they are saying that vesting period will 1 year if the earning is more than 12%. Second year if the company earning is more than 20% over the 2 year period. Third year if the entity's earning increase by more than 22% over the 3 year period. To this question they have given variable vesting period, means fixed vesting period is not fixed. So we need to estimate the vesting period as per the expectation of earning. I hope this type of question you have done. The fair value of 1 shares on grant date is 122. Okay, so this information has been given. In 2001, earning was 10% and 29 employees left the organization. The company expect that earning will continue at the similar rate in 2002 and expect that the shares will vest at the end of year 2002. So can you say in year 1 the condition was not satisfied and they are expecting that the condition will be satisfied in year 2. Therefore for year 1 the vesting period will be 2 year. Vesting period will be 2 year. This is estimated vesting period. Estimated vesting period. The company also expect that additional 31 employee will leave the organization in 2002. Now they are expecting that in the year 2002, additional 31 employee will leave the organization and 440 employee will receive their shares at the end of year 2002. If the vesting period is 2 years, so you need to estimate the number of employees who are expected to vest the option in year 2. So they have given 440 employee is expected to vest the option in year 2. At the end of 2002, the company's earning was 18%. Therefore, the share did not vest because the second year also the actual earning is 18%. The condition was not satisfied. The condition was not satisfied. The year 2 vesting period will not be 2 years. So of course we need now estimate the earning of third year. So only 29 employees left the organization during 2002. Company believe that additional 23 employees will leave in 2003 and earning will further increase so that performance target will be achieved in 2003. So now they are saying that the performance target will be achieved in 2003. Therefore in year 2, can I say the vesting period will be estimated to be 3 year. Vesting period will be estimated to be 3 year. At the end of year 2003, only 21 employees actually left the organization. Assume that company's earning increased to desired level and performance and target has been made. Determine the expense for each year. We need to find out the expense of each year. Understood? So normally in this type of question, I need to be very much clear about the about all the information. I will always suggest that whenever this type of questions come, always try to prepare one timeline, because one information which you have taken wrong from the question, the entire solution will become wrong. The entire solution will become wrong. So always whenever this type of questions come now, I will say try to prepare one timeline. One timeline. Correct? Let us start preparing. So what they have given in on 1st Jan 2001. On 1st Jan 2001, but what is the number of employee? 500. What is the number of option per employee? 100. What is the fair value of option given? 112. Fair value of option given 112. Chalega? Correct. Then they are given the fair value. Yes, in 2001 earning is 10% and 29 employee left the organization. So 29 employee left the organization. Employee left is 29. Yes, sir. Then what is given? Yes, sir. And then company also expect that additional 31 employee will leave the organization in 2002. The expectation is that in year 2, additional how many employee? 31 employee will leave the organization. This is the expectation. This is the expectation. Okay, sir. Then at the end of 2002, the company's earning was 18% and the condition was not satisfied. Actual number of employee left in the organization was 29. So 29 actually, once again, employee left is equal to 29. Employee left is equal to 29. Understood? Yes, sir. Then they are expecting that how many employee will leave in 2003. They are expecting that how many employee? Company believe that additional 23 employee will leave in 2003. So employee left year 3. How many employee may leave? They are saying 23 employee may leave the organization. Actual employee left in that year is how much given? Actual employee left in that year is given how much? 21. 21 employee has left. Is actually what is the number of employee who actually vested the option? That is 500 minus 29 minus 29 minus 21 is equal to 421 employee. Correct? This is the entire information given. Then is for these the estimated vesting period will be 2 years, and for these estimated vesting period will be 3 years, and actual vesting period as per the information given is 3 years. Now we need to calculate the employee benefit expense. The employee benefit expense will be what? For year 1, but for year 1 how many employee you will take? So you need to take based on the expectation that option will vested in year 2, that is 500 employee minus 29 minus 31 you will take. So 500 minus 29 minus 31 means how many employee? 440 employee. What is the number option? 100. What is the fair value option? 112. It will be 1 by 3. So you need to do this working. This will be working. Then you need to find out cumulative expense. Cumulative expense become how much? 440 into 100 into 112 divided by 3. It is coming how much? You need to also calculate with me. Okay, everyone calculate with me. Everyone calculate with me. Divide by 3. It is coming how much? 15. Coming how much? 1 by 2. My mistake. This will be 1 by 2. 1 by 2. It is 440 into 100. Fair value is 122. The fair value is 122. Therefore, the answer was not coming. Okay. 440 into 100 into 122 divide by 2. It is coming 26 lakh 84,000, and the expense will be also 26 lakh 84,000. Then year 2 what will do? Bata? Year 2. Now year 2 the vesting period will become 3 years, but number of employee actually left become 29, and we are estimating that number of employee who leave the company in year 3 is 23. Therefore it will be 500 minus 29 minus 29 minus 23. So it is 419 employee. We'll take 419 employee into 100 into 122, and now we'll do 2 by 3. Now we'll do 2 by 3. Correct, because vesting period now become 3 years. So 419 into 100 into 122 into 2 divided by 3. It is coming how much? This will be 34 lakh 7,867 minus कर दो इसमें से 26 lakh 84,000. This is coming how much? 7 lakh 23,867. I hope this also you have understood. And last year 3 will take based on actual number of employee. The actual number of employee is now how much? It will be how much? 500 minus 29 minus 29 minus 21 is equal to 421 imply. So 421 into 100 into 122 into 3 by 3 into 3 by 3. This is coming how much? 421 into 100 into 122. This is coming how much? 51,36,200 minus 34,07,867. That is coming how much? 17,28,333. Have you got this answer? Then journal entry you can do. Journal entry is not complicated. The first journal entry was EB expense account debit to SBP reserve, EB expense account debit to SBP reserve, EB expense account debit to SBP reserve. Then you will pass one journal entry SBP reserve account debit to equity share capital to securities premium, because there is no exercise money given in the question. So the simple journal entry will be done. Understood? Yes, sir. I think this question done. Let me take one more question. Journal entry you can see. The second question is based on one particular concept, which is nothing but SBP plan with cash alternative. SBP plan with cash alternative. Correct? This is also one of the popular questions which have been asked many times in exam. Tata Industry has issued a share-based option to one of its key management personnel, which can be exercised either in cash or equity, and it has the following features. You can see cash settled shares is 74,000. Service condition is 3 years. Option number 2 is given. Was option number 1. Option number 2 is given. Equity settled shares condition is 90,000. Condition is what? Service 3 years, but there is a restriction to sell 2 years. This can I say in equity settlement there is a restriction to sell. It cannot be sold for 2 years. So there is some restriction. Whenever there is some restriction, so we need to find out fair value option with restriction. That will be given the question. For equity settlement, we'll consider fair value option with restriction, and for cash settlement, we'll take fair value option without restriction. Now they have given fair value equity price with a restriction of shares for 2 years with a restriction. So that is 115. This is for equity settlement, and fair value on grant date. This is for cash settlement. Understood? Then they have given fair value at the end of each year. 138, 140, 147. If nothing is given, it means this is a fair value of option without restriction. Understood? So this will be used for cash settlement, and this will be used for equity settlement. Now in this, what is the first step? First we need to find out liability component, equity component on which date? On grant date. So whenever this type of questions come, so first working note is that first you need to find out calculation of fair value of liability component and equity component on grant date. So first you will find out what is the fair value of liability component. That will be maximum liability on grant date. What is the number of shares in cash alternative? That is how much? 74,000. And what is the fair value of option without restriction on grant date? That is 135 multiplied by 135. This become how much? 74,000 into 135. That is how much? 99,90,000. So this become maximum liability. What is the objective? First calculate maximum liability, then find out what is the fair value of equity component. Correct? Now so fair value of equity component will be equal to fair value of option under equity settlement. So fair value of option under equity settlement minus will do fair value of liability component. So what is the number of shares under equity settlement? That is how much? 90,000. And what is the fair value of shares with restriction? That is 115. So their fair value is now 115. Understood? What you will do? 90,000 into 115. 90,000 into 115 minus from this you will do this component. Minus is what? 99,90,000. Understood? So this is coming how much? 90,000 into 115 minus 99,90,000. So this is coming what? 3,60,000. So 3,60,000 become the fair value of equity component. Correct? Now understood? So this become fair value liability component. This become fair value equity component. Now this will be accounted as equity settled, and this will be accounted as cash settled SBP. So it means, can I say, this will be reassessed at the end of each year because this is a liability component. So all the liability, SBP liability, will be reassessed at the end of each year based on the fair value option at the end of each year. Understood? But for this, no reassessment required. No reassessment required. However, can you see, if you want to find a fair value of equity component per option, you'll do divide by 90,000. If you'll divide by 90,000, it will come 3,60,000. Divide by 90,000, it is coming 4. So we can say this is the fair value of option, fair value of equity component per option, fair value of equity component per option, yeah, per shares. Understood? Yes, sir. Now working note number 2 will be calculation of EB expense. Calculation of EB expense. How to calculate this? Follow. We'll do year 1 liability component, equity component. Liability component, how many shares are there? 74,000. But can I say we'll do reassessment of fair value? So what is the fair value given at year end 1? At year end 1, it is 138. So we'll do into 138. Into 138, and we'll do 1 by 3. 1 by 3. Correct? Because we are calculating expense for the first year only. So 74,000 into 138 divided by 3. It is coming how much? 34 lakh. 34 lakh 4,000. Correct. So this become cumulative expense. We need to find out expense. The first year, the expense will be same only, 34 lakh 4,000. And for equity component, means you can also do 3,60,000 divided by 3. But if the number of options change, correct, now then it will be wrong. So always you calculate based on the fair value equity settlement per option. So what is the number of shares? 90,000 into 4 into 1 by 3 you'll do. That is nothing but 3,60,000 divided by 3 equal to 1,20,000. 1,20,000. So this will be 1,20,000. What is the total expense? इसमें ऐड कर दो 34,04,000 plus 1,20,000. This is coming 35,24,000. Understood? This become EB expense of first year. This become EB expense of first year. Understood? Have you understood this point? Now year 2 you'll do reassessment again, liability component. So it will be 74,000 into what is the fair value option at the end of second year, that is 140 into 140 you'll do. Now you'll do 2 by 3. 2 by 3 how much? 74,000 into 140 into divided by 3. It is coming how much? Bolo? That is coming 69 lakh 6,667. From this you will minus this, minus 34, so 4,000. That is coming how much? That is 35 lakh 2,667. Correct. And equity component, it will be same, 90,000 into 4 into 2 by 3. 90,000 into 4 into 2 divided by 3. It is coming 2,40,000. 2,40,000 minus 1,20,000. This will be 1,20,000. So this become the expense of second year. This may add kar do 35,02,667. That is coming 37,42,667. Similarly, you will do for year 3. Similarly, you will do for year 3. Have you understood? Correct. I think you have understood. Year 3 you can do. I have just explained you how to do for year 1 and year 2. Have you understood this calculation? This calculation year 3 do by your own, everyone. And give me the answer of year 3. Liability component, equity component. Fast. Now, I just want to show what will be the journal entry for this. Normally, student do mistake in journal entry. Normally, student do mistake in journal entry. Follow. This is 36 2267. Now correct? Hello. Have you understood this point? Respond fast. Have you understood this calculation? Third year you have done. What I will do. Liability component will be 74,000 into what? Into 147. Into 147 into 3 by 3. That is 74,000 into 140. That is 1 crore 30, 1 crore 3 lakh 3,000. From this minus 3906,667. That is coming how much? 34,53,333. Have you got this answer? Check karo. Your answer might not be correct. Answer is not 74,000. Oh, I'm 1 lakh 1 crore 87 1 crore 8 lakh thousand minus 9 coming how much? 3971. And equity component will be how much? Will be same 1,20,000. Add kar do 1,20,000. That is coming how much? 40,91,333. Now journal entry. Can I say first year journal entry will what? EB expense account debit to SBP reserve to SBP liability. Then second year same journal entry. Third year same journal entry. Only I need to give you journal entry for settlement. Now settlement journal entry. Settlement journal entry, can I say, we'll assume that year end 3 is vesting day as well as exercise day. Year end 3 is the exercise day as well as vesting day. Because they have not given exercise day, we'll assume the exercise day and the year vesting day are same. Correct. So 31st December 2002. Past one journal entry. 31st December 2002. So we need to first assume that if employee opt for cash settlement, then what will be the journal entry? First journal entry will what? SBP liability account debit. How much? That is what? That is this amount only. It will be 1 crore 8,78,000. 1 crore 8,78,000. And this will be paid 1 crore 8,78,000. And B, SBP reserve account will be closed. SBP reserve account will be closed by transfer to retained earning. It will be transfer retained earning. So this will be 3 lakh 3,000, 3 lakh 60,000. First journal entry, have you understood? Correct. Now, if case number 3, if employee opt for equity settlement, then what will be journal entry? In that case, journal entry will what? SBP liability account debit. How much? It is 1 crore 8 lakh 78,000, and there is no exercise money given. So bank account debit, if there is some exercise money is given but nothing is given, exercise price is not given. If given, so you need to also write on exercise price. The exercise price will be the number of shares multiplied by exercise price. Correct now? That is not given the question. Whenever exercise price is not given, we'll assume exercise price is what? 0. Correct. 2, can I say 2? It will be securities premium. It will be equity share capital plus securities premium. Understood what I am saying? Correct. So we write on whenever nominal value is not given, so always assume that always we can also always assume that the entire amount will be transferred to equity share capital plus securities premium. So nowadays ICI is giving journal entry in this way. Whenever nominal value is not given, now they are writing in this way: equity share capital plus securities premium will be 1 lakh 80 sorry 1 crore 8 lakh 78,000, and then SBP reserve will be closed by transfer to retained earning, that will be worth 3 lakh 60,000, 3 lakh 60,000. Understood? Have you understood this journal entry? Correct? Any doubt? Similar journal entry has been given. Now in some of the question what they are doing now, they are just writing here this only, and this also has been transferred to share capital plus securities premium. This question, though, I think they have assumed that nominal value is what, because the nominal value I don't know, the nominal value was not given in the question. If nominal value is not given in the question, you can assume nominal value is equal to 100 or 10 rupees, and then balance can be transferred to securities premium. But nowadays I have seen ICI is passing the journal entry equity share capital plus securities premium and writing the entire amount, understood? Or you can assume nominal value also. So you can see in this solution they have assumed nominal value is equal to 100 and then balance is transferred to what, share premium. In some of the solution what ICI is doing, this share based payment reserve is also debited यहाँ पर, and this amount is also transferred to securities premium. This amount is also transferred to securities premium, which from my point of view is more correct. So in some solution they are doing in this way, in some solution they are doing in that way also. Correct now? Understood? I hope you are understanding. You can follow this journal entry, or you can follow the journal entry and you can transfer this 3,60,000 to also securities premium. Got this point? Yes, sir. Then coming to question number 3, this is a question of stock appreciation, right? Is cash settled SBP. One question will take for cash settled SBP. But they have given this very good question. India issued 11,000 share appreciation right that vest immediately. To its employee, that vesting day is the grant day. Is it vested immediately? His vesting period is 1 day only. Correct? On 1st February 2020. So can you see if it is vested immediately, entire expense will be recognized on that day only? Yes, sir. The SARS will be settled in cash using an option pricing model. At the date, it is estimated that fair value of SAR is 100. SAR can be exercised at any time up until 31st March 2003. An exercise period has been given 3 years. So it can be exercised at any time. At the end of the period of 31st March 2001, it is expected exercise the option 95% of total employee. Like it is expecting that 95% of total employee will exercise the option. At the end of next year, it is expected that 92% will exercise the option, and finally it was vested. However, this word is not correct. This is not correctly used. This finally it was exercised by 89% of employee. 89% of employee. Correct now, because it was already vested. So at the end of the third year of exercise, it will not be vested, it will be exercised. So this is printing mistake, or I will say the question has not been drafted properly. But similar question have been asked in exam, so you need to always understand the emotions of the question. This is not vested, this is exercise. Correct now? Understood this point? It means in this on grant date only we recognize the entire expense. On grant day only we recognize the entire expense. What they have done, they go start. This is year 1 beginning. This is year 1 end. This is year 2 end. This is year 3 end. So at year end beginning, they have recognized the entire expense. What they have done? What is the total number of option? 11,000. 11,000. And of course, if nothing is given, we'll always assume that 100% will be exercised, so into 100%. And what is the fair value on that date? The fair value on that date was 100, to into 100. So what they have done? 11,000 into 100. It become how much? It become 11 lakh. So 11 lakh become the expense. 11 lakh become the expense. Then at year end 1, now they are saying only how many employee will exercise the option? Only 95% will exercise the option. 11,000 into 95% into now we'll take fair value option at year end 1, that is 132, into 132 will do, and that is coming 13 lakh 79,400. This become cumulative expense. Out of that, how much already recognized? 11 lakh. The difference will become expense. Difference will become expense. Chalega. Then at the end of year 2, now they are expecting that 92 employee will exercise the option 92%. 11,000 into 92% into fair value is what? 139. So we'll do into 139. Now the cumulative expense become 14 lakh 6,680, but out of that, how much already recognized as the expense? 13 lakh 79,400. The difference will become the expense of third year. Then last year, actually 89% actually exercise the option, so actual become 11,000 into 89%, that is 9790 into the fair value of option on that date, that is equal to 4141 into 141 will do, so that is coming 13 lakh 80,390. So you can see your liability reduced. So any reduction in liability will be considered as what? Loss, and that reduction in liability will be considered as gain, and that gain will be considered a reduction of expense and transfer to PL. So you can see this will be gain and this will be considered reduction of EB expense. So we need to pass journal entry for that. Some simple. This question can be very important. Only you can do mistake at this point only if you consider year one beginning as grant day. Correct now. So normally we do 1 by 3, 2 by 3, 3 by 3. You can do mistake in that particular question. Careful about this type of question. Already this type of question have been asked in exam. Understood this point? So what will be journal entry first at year beginning means on 1/4/2000 is on vesting day will pass EB expense account debit to SBP liability with 11 lakh. Then at year end 1 will pass EB expense account debit to SBP liability with 2,79,400. Then at year end 2 will pass EB expense account debit to SBP liability with 27,280. Then year 3 end we reduce the liability. We'll say EB expense account now SBP liability account debit to EB expense, that is 26,290. Then entire liability will be paid at year end 3. So SBP liability account debit to bank, the total liability is how much? 13 lakh 80,390. This journal will be done. Super easy question, but can be dangerous in exam if you are not reading the question carefully. Got this point? Can we come to the next question? Yes, sir. This question number 4 is related to group share based SBP plan. Group share based SBP plan. I will take this question at the end. I'll come back. Right. This question number 5 is also related to SAR. Good question. It is a good question. But they are saying entity which follow the financial year as per the calendar year grant 1,000 share appreciation right to each of his 40 management employee as on 1st Jan 2005. The SAR provide the employee with the right to receive cash equal to the appreciation in the entity's share price since the grant date. Means it is also a question of SAR. All the right vest on 31st December 2006. This 2 year is the vesting period, and that can be exercised during 2007-2008. This 2 year is the exercise period. Management estimate that on grant date the fair value of SAR is 11. On grant date the fair value of SAR is 11. So on grant date the fair value whatever is given is not relevant for SAR, because we do reassessment for the fair value of option at the end of each year. So this information is actually not relevant. It estimated overall 10% of employee will leave during the 2 year period. But overall 10% means in 2 years they are estimating that 10% employee will leave the company. This is an estimation. The fair value of SAR at the end of each year, you can see they have given fair value of SAR at the end of each year means vesting period and as well as exercise period, and then they have given 10% employee left before the end of 2006. So actually they are saying 10% employee left before the end. So estimation was also 10%, actual was also 10%. So 10% of 40 is 4, so it means 36 employee actually vested the option. Yes sir. On 31st December 2007, when the intrinsic value of SAR was 10, 6 employee exercised their option and the remaining 30 employee exercised their option at the end of 2008 when intrinsic value of SAR was equal to the fair value, that is 12. How much expense and liability should be recognized? This is a good question. I will just like to explain what they have said. You can see what they have given. 2 year is the vesting period and 2 year is the exercise period. This is vesting period, this is the exercise period. Initially how many employee? 40 employee. Like number of option per employee. Number of option per employee it is given 1000. 1000 is the number of option. Now they have given fair value of option on grant date is 11 and fair value of option at the end of each year they have given how much? 12, 8, 13, 12. 12, 8 is 12, 8, 13, 12. Then they have given intrinsic value. Intrinsic value they have given at this point of 10 and at this point of 12. Is at the end of the contractual life. Means at on this date, always the fair value and intrinsic value will be same. The fair value is given. This is nothing but equal to intrinsic value. Now just try to understand. We calculate SBP liability based on fair value. This SBP liability will be calculated based on fair value, but payment will be always done based on intrinsic value. Payment will be always done based on intrinsic value. If intrinsic value is not given, we'll assume fair value and intrinsic value are same, but normally they will provide intrinsic value for this particular type of question. Understood this point? Now they are saying that they have estimated that at initially they have estimated that 10% employee will leave the company. However, actually also 10% employee left the company at the end of 2006. This is the entire information given. So 36 employee actually vested the option. Out of that, 6 employee exercise their option at the end of third year, and 30 employee exercise their option at the end of fourth year. This is the entire question. Correct? So how to calculate EB expense? Correct? So calculation of EB expense and liability. Year 1, बताओ how many employee will take? Estimated number of employee were 36 only. So 36 employee we are actually estimating that they will be able to vest the option. So 36, so 10% employee will go 36 into 1000 into what is the fair value. The fair value, this information is not at all relevant. We'll take fair value option at year end 1 because we are calculating EB expense at year end 1. It will be 12. It will be 12 into 1 by 2. So how much it is coming? 36 into 1000 into 12 divided by 2. It is coming 2 lakh 16,000. So your expense will be also 2 lakh 16,000. They have also asked you to calculate liability. Liability will be also 2 lakh 16,000. Understood? Then year end 2. Now actual number of employees is also 36 into 1000, but the fair value now become 8, and you will do 2 by 2. You will do 2 by 2. So 36 into 1000 into 8. It is coming how much? 2 lakh 88,000. But out of that, how much already recognized? 2 lakh 60,000. So your expense will be 72,000. Your liability will be 2 lakh 88,000. Got this point? Yes, sir. Then at year end 3, now this is the exercise period, year end 3. So for SAR, we do reassessment during vesting period as well as during exercise period. Correct? Now 6 employee exercise the option. So 6 employee exercise the option, and the payment will be done based on intrinsic value. So into 10 plus 30 employee has not exercised the option. For that we need to calculate liability, and liability will be based on fair value. Liability will be based on fair value. So into 1000 into what is the fair value on that date? 13. So 13 will be used for reassessment. This is coming how much? Bata 30 into 1000 into 13, that is coming 3 lakh 90 plus 60,000. The total become 4 lakh 50,000. This become the total expense. Out of that, how much already recognized? 2 lakh 88,000. So 4 lakh 50,000 minus 2 lakh 88,000. This will come 1 lakh 60,000. But out of this 4 lakh 50,000, can I say this 60,000 only paid? So your liability will be only what? This portion. Your liability will be only this portion. That will come how much? 3 lakh 90,000. 3 lakh 90,000. Understood? Have you understood this? Got this point? Then fourth year, it will be based on 30 employee, and 30 employee exercise the option. So 30 employee into 1000, and the excess and the intrinsic value is given 12. This is coming 30 into 1000 into 12, that is 3 lakh 60,000. Your liability was how much? 3 lakh 90. Now that become 3 lakh 60. It means your EB expense will reduce by 30,000, and the liability at year end 4 will become nil. This is the entire calculation. Have you understood the calculation? Respond fast. Have you understood this entire calculation? Have you understood the difference between fair value and intrinsic value option? Fair value and intrinsic value option. So fair value will be used for the reassessment of liability. Intrinsic value will be used for the payment of liability. Payment of liability. This much have you understood? Now journal entry you can do. Journal entry is not at all difficult. Have you understood this particular point? Got this? Now journal entry, can you repeat with me? First journal entry will be what? EB expense account debit to SBP reserve with this amount. Second journal entry is SBP liability. Second journal entry is EB expense account debit to SBP liability with this amount. Third journal entry will be what? EB expense account debit to SBP liability with this amount. Correct? And but we need to pay the SBP liability for 60,000 to SBP liability account debit to bank with this amount 60,000. Then third, we need to reduce the liability. The journal entry become what? SBP liability to EB expense 30,000, and then entire 3,60,000 will be paid. That is SBP liability account debit to bank 3,60,000. Journal entry also done. Journal entry also done. Chalega. Next question. So this next question is based on the measurement date. Measurement date is a newly inserted question till now not asked, can be asked in MCQ. This question can be asked in MCQ. Let us do it. New Age Technology Limited has entered into following share-based payment transaction. On 1st April 2001, New Age Technology Limited decided to grant share option to its employee. So this is the grant date. The scheme was approved by the employee on 30th June 2001. The scheme was approved by the employee. So this is not the grant date. Approved by the employee on 30th June 2001. So this become grant date. 30th June 2001 become the grant date. Understood? Correct. New Age Technology Limited determine the fair value of share option to be valued of the equity share on 1st April 2001. So whenever there is a employee share based payment, grant date will be only the measurement date, means the fair value of option is measured on grant date, which is nothing but 30th June. So in this question, what they have asked, identify the grant date and measurement date. So for the first option, grant date will be also 30th June, measurement date will be also 30th June. Correct? Yes. Second case. On 1st April 2001, New Age Technology Limited entered into contract to purchase IT equipment from Bombay Software Limited and agreed that contract will be settled by issuing equity share instrument of the New Age Technology Limited. New Age Technology Limited received IT equipment on 30th July 2001. So they have received the equipment on 30th July 2001. The share-based payment transaction was measured based on the fair value of equity instrument on 1st April 2001. So in this question, of course, the grant date you can say is 1st April 2001, but the measurement date will be based on the equipment which have been on the base of the when they are obtain the control of that asset. So in this case, you will find out the fair value of equity shares based on 30th July 2001. 30th July 2001. Correct now. Just see. The grant date will be the agreement date, that is 1st April 2001, but the measurement date will be the date when you obtain the control of the asset, that is 30th July 2001. Very important, can be asked in the question and have been already asked in MCQ based question in the MTP or RTP. I think this type of question they have already asked. Correct now. The measurement will be based, means you recognize the journal entry on this date. You recognize the journal entry and you will measure the fair value of option based on this date. Based on this date. Chalega. On 1st April 2001, New Age Technology Limited decided to grant the share option to its employee. This is also one second employee share based payment. The scheme was approved by the employee on 30th June. So 30th June become the grant date. The issue of the share option was, however, subject to the same being approved by the shareholders. Now approval of shareholders is also required. The scheme was approved by in the general meeting held on 30th September. 30th September become the grant date as well as measurement date. Grant date will be also 30th September, measurement date will be also 30th September. You can see 30th September is the grant date and measurement date. Understood? Correct. So this type of question can be asked. Chalega? Yes sir. Come to now one more question. This is the question based on modification. Good question. What they have written? UA Limited had on 1st April 2015 granted 1000 share option each to 2000 employee. The options are due to vest on 31st March 2018, provided the employee remain in the employment till 31st March 2018. On 1st April 2015, the directors of the company estimated that 1800 employees would qualify for the option on 31st March 2018. So what was the estimated number of employees who can Based the option that is 1800. The estimate was amended to 1850 imply on 31st March 2016 and further amended to 1840 imply on 31st March 2017. Means if we have understood the question, so can I draw the timeline? What they have given? On 1st April, what is the grant date? On 1st April 2015. On 1st April 2015, how many employees are there? 2000. How much option granted per employee? That is 1000. Now they are expecting on this date they are estimating the number of employee who will vest the option is 1800. On this they are expecting that number of employee who will vest the option is 1850. Yes or no? Right. 1800 1850, and then their estimation was revised to 1840. On this date it become 1840. This information is not given in the question. Third year actual number of employee who will vest the option, that is not given in the question. Chalega. Now on 1st April 2015, the fair value of option was 1.20. The fair value of option is how much? So on this date the fair value of option is 1.20. Correct. Then what is given? The fair value increased to 1.30 as on 31st March 2016. So now fair value become 1.30. So here it become 1.30. Then, but due to challenging business condition, the fair value declined thereafter in September 2016 when the fair value of option is 0.90 on September 2016. September 2016 will come somewhere यहाँ पर, it become 0.90, become 0.90. Okay sir. The director reprice means modified the option, and this caused the fair value to increase to 1.05. Means what is the fair value of modified option? So now this was the original option. Now what is the modified option? What is the fair value? Fair value become 1.05. Now 1.05, that become 1.05. Understood? Correct. The trading condition improved in the second half of the year, and by 31st March 2017 the fair value of option was 1.25, and now the fair value of option means of course modified option at the end of the second year become 1.25. Understood? Yes sir. SBI Limited decided that additional costs incurred due to repricing of option on 30th September 2016 should be spread over remaining vesting period from 30th September to 31st March. The company has requested to suggest a suitable accounting treatment for this transaction. Now just try to understand. This is equity settle. Whenever there is equity settlement, the fair value of option on grant date is relevant. And can I say fair value of option of subsequent reporting date is not relevant? So this is not relevant. This information is not relevant. But if the equity settled SBP is modified, so we need to find out incremental fair value of option due to modification. Incremental fair value of option due to modification means what? Fair value of modified option, fair value of modified option on modification date, and the fair value of original option on modification date will compare. This minus this will do, and the incremental, we need to find out incremental fair value option, that is 1.05 minus 0.90 is coming how much? 0.15, and this incremental fair value option will be recognized as an additional expense during the remaining vesting period from the date of modification. From the date of modification is this 30th September is the date of modification, means it will be recognized as an expense from this date to this date, means for how many year? 1.5 year. It will be recognized as an additional expense for the remaining vesting period. This is the concept. This is the concept. So of course this information is also not relevant. This information is also not relevant. And so this information is relevant. This original expense will be based on 1.20 and additional expense will be based on 0.15. Have you understood this point? What will be the expense of first year? Year 1. But what will be the year 1? Year 1 so only will calculate original expense only. I am writing original expense. Year 1 original expense. So original expense will be based on, but how many employee? So there are 3 employee given. 2000, 1800 or 1850. But which figure is correct? We should calculate original expense of year 1 based on how many employee? Based on how many employee? Bata. Everyone. Here you can do mistake. you are not reading the question carefully, you can do mistake. So original expense will be calculated based on which employee. Always take the number employee at the end of the year. If this information is not relevant, this information is not relevant, this information is relevant. Correct now. So we'll take 1850 employee multiplied by number of options 1000 multiplied by 1.20 multiplied by 1.20 divide by into this will be what into 1 by 3 you'll do. How much is coming? 1850 into 1000 to 1.2 divided by 3 is coming 7 lakh 40,000. 7 lakh 40,000. Got this fine? 7 lakh 40,000. Expense will be also 7 lakh 40,000. Got this fine? Then year 2, can I say we need to find out original expense as well as additional expense? Divya, you have said 1800 rectified. It will be 1850. Panitharan, you have also taken wrong number of employee. Here only you will do mistake. Correct now. So be careful. Always take the number of employee who are estimated at year end 1, because you are calculating expense at year end 1. You are not calculating expense at year beginning. So all the information which are given at year end 1, that is relevant. But you will take fair value option of grant date, because this is equity settlement, and for equity never do subsequent remeasurement. Understood this point? Have you understood this entire concept? You understood? Now year 2, first original expense will be based on the 1840 employee. 1840 employee, because this has been changed. Now we'll take 1840 employee into 1000 into 1.20 into 2 by 3 plus additional expense will be 1840 into 1000, and that is how much? 0.15 incremental fair value option into what? Into, can I say, for the second year it is only half year, so 0.5, and the remaining total vesting period is 1.5. Understood? So this total will become cumulative expense. From this you deduct this will become the expense of second year. Got this fine? Correct. Suppose in the question they have given actual number employee, they have given यहाँ पर actual number employee is 1800. Let us assume. Then we will also calculate for year 3. That is not given, so they have not asked for year 3 in this question. Suppose they have asked year 3, will do original expense will be based on actual number employee into 1000 into 1.20 into 3 by 3 plus additional expense will be equal to 1800 into 1000 into 0.15 into what? 1 divided by 1.5 divided by 1.5. This become cumulative expense. So this become cumulative expense. From this you deduct this will become expense. Understood? This I have taken assumption. This is not given in the question. So don't be confused. Have you understood the entire point? Then we can pass the respective journal entry. The first journal entry will be what? For this amount it will be EB expense account debit to SBP reserve. Then with this amount EB expense account debit to SBP reserve. Then with this amount EB expense account debit to SBP reserve. Correct? And then SBP reserve account debit, bank account debit to equity share capital to securities premium on exercise. And if the options are not exercised, so that will be cancelled. Then SBP reserve account debit retain earning. Got this fine? Simple. Chalega? Yes sir. Modification, one question you have understood. This is also good question, can be asked in exam. Correct. Question also I will. Now one more question I am taking. This is newly inserted question, till now not asked in exam, can be asked in exam. This is based on the concept of graded vesting. Means it will what happen? The entire option will be divided into three group. That is known as graded vesting. Let us read the question. The following particulars in respect of stock option granted by a company are available. Number of employee covered 400, number of option per employee 60, nominal value per share given 100, exercise price per share they have given 125. Here offered were put in three group. Group 1 was for 20%. 20% 60 means for 12 shares offered. 20% of 60 you will calculate. With a vesting period of 1 year. Group 2 40%. 40% means 24 with a vesting period of 2 years. The group 2 vesting period is 2 years. And group 3 was for 40%. 40% means 24 with a vesting period of 3 years. So group 1 vesting period is 1 year. Group 2 vesting period is 2 years. Group 3 vesting period is 3 years. Divya has asked one doubt, so let me come with that doubt first. You have not understood this year 2. Year 2 you have not understood? So I think original expense so you have understood. Original expense was 1840 into 1000 into 1.20 into 2 by 3. Original expense you have understood na Divya? Follow. Now, additional expense means what? Whenever there is a modification, we need to find out incremental fair value of option due to modification. Because can I say we have done modification? Why we have done modification? Motivate the employee for the remaining vesting period. To motivate the employee for remaining vesting period. So for that remaining benefit which will accrue in the remaining vesting period, we have incurred some additional expense. Correct now. By doing some modification in the plan, so what is the fair value of option, modified option on that date 1.05? What is the fair value of original option on that date 0.90? So this become the incremental fair value of option due to modification 0.15. So this will be recognized as an expense over the remaining vesting period from the date of modification. So this is the half year and this is the 1 year. So it is become 1.5 year, 1.5 year. That only we have done. If 0.15 become the incremental fair value option, so 1840 into 1000 into 0.15. So for the second year, only for 6 months, we need to calculate expense. We'll do 0.5 year divide by 1.5 year. So that become the additional expense for the second year. Now you have understood, Divya? Now have you understood, Divya? Understood. Similarly, for year 3, if suppose they have given the actual number of employee who vested the option, suppose they have not given the question, then we'll do calculation in this way. Have you understood the third year calculation? Got this point? Now I was doing question number 9. So in this question they have given 3 groups. Each group, group 1, group 2, group 3 have the different number of options with the different vesting period. Group 1 will vest in year 1, group 2 will vest in year 2, group 3 will vest in year 3, and therefore the fair value option per share on grant day was 10 for group 1, 12.5 for group 2 and 14 for group 2. Now they have given position on year 1. Number of employees left 40. Estimate of employee to leave in year 2 is 36. Estimate of employee to leave in year 3 is 34. Employee exercising the option in group 1 is 350. First I will do only for first year, correct now. So let's see what the information has been given. One thing, this question is for how many year? 3 year. Now this become grant date, become Y0, Y1, Y2, Y3. So how many employees are there? How many employees? Total number of employee is 400. What is the total number of options? What is the nominal value of shares? 100. And what is the exercise price? is given 125. Exercise price is given 125. Now they have given this entire option has been divided into three groups. Group 1, Group 2, Group 3. In Group 1, how many equity shares are there? That is 12, then 24, then 24. What is the vesting period of Group 1? 1 year, 2 year, 3 year. What is the fair value? This is 10. This is fair value of Group 1 is 10, then 12.5, and then 14. This information have you understood? Then they have given for the first year actual number employee left is equal to how much? 40. 40. And how many employee will leave in year 2 and year 3? This is the estimated number employee. Year 2 they are estimating 36, and year 4 they are estimating 30, 36 and 34. 36 may leave in year 2, 34 may leave in year 3. Correct? It means, can I say for Group 1, Group 1 will vested in year 1 only. So how many employee actually vested the option? So how many employee actually vested the option? Batao, is 400 minus 40. So 360 employee vested the option. But how many employee exercise the Group 1 plan? It is given that how many employee actually exercise the option of Group 1, that is 350. So out of 360, 350 employee exercise the option and 10 employee are nalayak. They will not exercise the option. This is the information given. Correct? So let us calculate EB expense of first year. So calculation of EB expense of first year. Can you say we are doing for year 1? Year 1 we have Group 1, Group 2, Group 3. Okay, Group 1 will calculate the expense for the number of employee who actually perform the condition. It is 400 minus 40, that is 360 employee. So 360 employee. What is the option under Group 1? That is 12. What is the fair value option? That is 10. And this will do 1 by 1. Correct? So this is coming how much? 360 into 12 into 10. That is coming 43,200. Have you understood this point? Then year 2, how many employees are expected to vest the option in year 2? So that is 400 minus 40 minus 36 will do, because that for that vesting period is 2 year only. So we'll do 400 minus 40 minus 36, that is 324. So we'll calculate for 324 employee. This is 324 employee. What is the number of option? 24. What is the fair value? 12.5. What is the vesting period? 2. So we'll do 1 by 2. We'll do 1 by 2. Have you understood this calculation? This is 324 into 24 into 12.5 divided by 2. So that is coming 48,600. Similarly, we'll do for Group 3. So Group 3 we need to find out number of employees who are going to vest the option in year 3. So we'll do 400 minus 40 minus 36 minus 34 also. It will be 400 minus 40 minus 36 minus 34, that is 290 employee. So we'll calculate for 290 employee. The number of option is 24. The fair value is 14. This will do 1 by 3. How much it is coming? 290 into 24 into 14 divided by 3. It is coming 32,480. So this become cumulative expense. So expense will be same for the first year only. 43,200, 48,600 and 32,480. This become the total expense. Total expense calculate karo. This 43,200 plus 48,600 means it is 1,24,280. Understood this? Have you understood this? Now let us come to year 2. Now in year 1 the option Group 1 option is exercised. Now Group 1 will not be considered in year 2 and year 3. In year 2 only we'll think about Group 2 and Group 3. Now what they are saying, let us see information about year 2. Now what they are saying, actual number of employee left in year 2 is 35. Now employee left in 35. And how many employees is expected to leave in year 3? They have given year 3 mein how much? You can see 30 employee will leave. 30 employee will leave. Now how many employee will vest? The group 2 plan. Group 2 plan, so it is 400 minus 40 minus 35. So 325 employee will vest. But out of that, how many employee will exercise? The 319 employee will exercise group 2 plan. So how many employee are nalayak? Nalayak is what? 6 employee are nalayak. This is the information. Got this point? So let us calculate EV expense of year 2. Year 2. We will consider only group 2 and group 3. So the how many employee will take for group 2? So it will be 400 minus actual employee 40, then actual employee 35, that is 325. We will do 325 into 24 into 12.5 into 2 by 2. This is coming how much, bata? 325 into 24 into 12 by 12.5. It is coming 97,500. From this I will deduct this minus 48,600. That will come 48,900. 48,900. Understood? Are you calculating with me now? You calculate with me. I am doing very fast, but I am writing so that you can also understand. Chalega? This chapter is the entire game of this calculation. If you have done wrong in this calculation, your journal entry is also wrong. I will say be careful about this particular calculation. Then for group 3, it will be how many employee? So we can say 325 to le liye, 325 minus, we'll do 30 also, minus 30. It is coming how much? 295 employee. So 295 into 24 into 14 into 2 by 3 you'll do. Yes sir. So 295 into 24 into 14 into 2 divided by 3 is coming 66. 080 minus कर दो इसमें से, minus do this, it is minus 32,480. How much is coming? 33,600. So this become the expense. Expense 48,900 plus कर दो. So this is coming 82,500. Similarly, year 3 also you can do. Year 3 also you can do. Because I have seen many revision classes, they will only read. When I will read now, you will not be able to understand. I can also read from the solution, but you will die. Because I can understand what I am reading, but you can't understand what I am reading. When I am calculating, you can focus that yes, this number is coming from where, this number is coming from where. Chalega? By 3 you have calculated. Very good, excellent. But correct. Now let me explain this. Now employee left, what is the actual number employee left? Batao. It is given 28. 28 is how many employee actually vested the option. So that is what? 400 minus 40 minus 35 minus 28. So that is 297 employee. And how many employee exercise the option? It is given 295 employee exercise the option. So how many are nalayak? Nalayak is 2 number of employee. 2 number employee. Option not exercised immediately on vesting were forfeited. In this case also, the vesting day and exercise they are same. So once it will not be exercised, it will be forfeited. That is understood point. Compute expense to recognize. So year 3 bhi bata do. Year 3 only what will come? Group 3 will come. Group 3. So how many employee? So 297 employee into 24 into 14 into 3 by 3. How much it is coming? 297 into 24 into 14. That is coming 99,792. From this deduct this. So minus 66080, that is coming 33,712. Very good. Aravindam, you have done correctly. Means you are faster than me. You are faster than me. Happy. Got this point? Only I will explain you the account, SBP reserve account. Because in this question, I think they have asked you to prepare account. So I will just explain you SBP reserve account. If I ask you to prepare SBP reserve account, first year I will do, second year, third year you can do by your own. Now year 1 I am doing, year 1, 31st March. Yes, we will do by EB expense. By EB expense, what is the amount? 1,24,280. And now on this date, group 1 plan will be exercised. So how many employee vested? Vested is what? 360, but exercise 350 employee को exercise करेंगे तो we'll do by bank. So 350 employee. What is the option under group 1? Total number 12. What is the exercise price? 350. What is the total number of option? 1000 into what? What is the exercise price? Exercise 350. What is the total number of shares under group 1? 12. And what is the exercise price? 125. So 350 into 12 into 125. This is coming how much? 5,25,000. This much amount will be received. This much amount will be collected. Correct? Understood? So we'll pass one journal entry, bank account debit to SBP reserve. Then on the same date, we'll add on 2 equity share capital. So this will be 350 into 12 and the nominal value is given 100. So 350 into 12 into 100. That is coming how much? 4,20,000. 4,20,000. This will be equity share capital. Now, some amount will go to securities premium. So normally student do mistake in securities premium. Can you say me what will be the amount of securities premium? Normally student do mistake in securities premium. So what will be the amount of securities premium? Everyone, fast. If you can give me securities premium account, means you know everything. Can you give me what will be the amount of securities premium? Calculate fast. So I am feeling that exam, I am also giving exam. Means I am also studying in such a way. In our days we used to study in such a way. Means fast मजा आ रहा है, लेकिन we are enjoying or not? We are enjoying or not? Correct ना? So let's see. It is 350 into 12. What is the uh, exercise price? 125. What is the fair value of option? 10. And what is this become total 135. And what is the nominal value? 100. So 35 is the premium. We will do into 35. So let's see. 350 into 12 into 35. It is coming 1,47,000. 1,47,000 is the premium. 1,47,000 is the premium. How you calculated 1,05,000? Understood? You can see 1,47,000 is the premium. Understood? So I know where you can do mistake. I know where you can do mistake. Normally student do mistake yahin par. Wherever I am saying you can do mistake, just give a highlight. In exam also you'll do mistake here only. So normally how to calculate premium? Just to try to understand. Exercise price write down. Then fair value write down. This becomes the total fair value of shares. So this becomes the total fair value of shares. This is the consideration received in cash. This is the consideration received in services. This is the total consideration minus nominal value. Anything we receive over and above nominal value is premium. So premium is 35. Understood? Like 25 is not correct. Means you have done 125 minus 100. यही तो mistake करता है लोग. 125 is the exercise money. That is not the fair value of shares. That is exercise money. Fair value share is what? 125 plus 10. That is the fair value of option. Got this point? Understood? Understood? Now, but how many nalayak number employee? Nalayak number employee, SBP reserve will be transferred retained earning. So what is the nalayak number employee? 10 employee into 12 into 10. So 1,200 will be transferred retained earning. Is the whatever fair value of option accumulated into SBP reserve for the nalayak employee will be transferred retained earning. Will be transferred to retained earning on cancellation. This point you understood, and the balance will become 2 balance carried down. What is the balance coming? Check karo. What is the balance coming? Fast calculate. This balance amount will be always equal to these two. If it is not equal to these two, means you are doing mistake. So it is coming 48,600 plus 32,480. It is coming 81,080. Just check whether it is coming same. If it is not coming same, means you are doing mistake. Have you understood? So this question is 100% expected. New question repeated. Last attempt also they have ask question from old scheme of syllabus. This question also belong to old scheme. Old scheme is when you used to do CA final. So this question can be repeated. This time तो I'm expecting this question either in this attempt or next attempt तो पक्का आता. अगर मई में नहीं आया नवंबर में पक्का आता ये क्वेश्चन. Correct, correct. This question is 100% expected in exam. Have you understood? Now can you do second year, third year by your own? Second year, third year, I think you can do by your own. चलेगा? Understood? Yes, sir. Understood. This is also question done. Means only now 2 questions are left. So the atpata question hai. This is question number 8. This is based on market condition. Market related performance condition. So what they are saying? An entity pays to share-based payment to its employee based on the below details. Number of employee 100. Fair value at grant date is 25. Market condition, share price to reach at INR 30. So what is the market condition? Market condition is that share price must reach at 30 rupees. Service condition, to remain in the service until market condition meets. So it means employee need to remain in the service until market condition is achieved. But we don't know when the market condition will be satisfied. Therefore, can I say we need to estimate the vesting period, and for management has estimated that expected completion of market condition means market condition will be achieved in 4 years. So this become the expected vesting period. Expected vesting period. Correct. Now calculate expense related to such share-based payment. There are 2 scenario given. Case 1, case 2. Market condition meet in year 3. Market condition meet in year 5. Correct. So there are 2 scenario given. So what they have given? Case 1. Case 1 though is very easy. I will explain from the solution only. So case 1, just try to understand. When the market condition is meet in year 3, to year 1, year 2 will be based on expectation. So year 1, what you will do is that year 1, what you will do? It is how many number employee? 100 employee. Whenever number of options is not given, we'll always assume 1 option per employee. 1 option per employee into what? Into what is the fair value on grant date? Fair value on grant date is 25 into 1 by 4 you will do, that is 625. Here 2 also you will do 100 into 1 into 25 into 2 by 4 you will do. So it will be 1250 minus 625, it will be 625. But in year 3 the condition has been satisfied. So if year 3 condition has been satisfied, the entire expense will be now recognized in year 3. In year 3 what will do? 100 into 1 into 25 into 3 by 3, that is coming 2500. to 2500 minus 1250 will be this. So year 4 will not recognize any expense because actual condition was made. Actual vesting period now become what? 3 year. So all the expense will be now recognized in 3rd year. But this point is the case number B is thoda sa interesting. Market condition meet in year 5. So what in AS 10212 to say that due to market condition will not change our planned expenses. Now just try to understand. Management has given one option and they are expecting that market condition will meet in 4 years. Is what is the objective of this option? That they want the employee to remain in the service 4 years. Is if the employee remain in the service 4 years, the objective of this option is satisfied. Is actually the planned expenses for 4 years only. Now if the condition is not satisfied in 4 years, but the employee has given the service or not. So if employee has given the service, then okay, my objective has been fulfilled. So all the expense will be recognized in 4th year only and nothing will be recognized in 5th year. Understood? In this case, you can see first year 625, second year 625, third year 625, 4th year 625, but in 5th year no expense will be recognized. Means here we'll do 1 by 4, here we'll do 2 by 4, here we'll do 3 by 4, here we'll do 4 by 4. Don't do 4 by 5. Don't do 4 by 5. Understood? Have you understood this? First, Krishnamurthy, first just try to understand whether you have understood this question. I'm coming to your doubt. Have you understood this point? This question can be asked as it is in exam for 4 marks, 5 marks, or can be asked in MCQs also. So important. Got this? What is your doubt, Krishnamurti? For retain earning is for cancellation. ऐसे पूछो, for cancellation of unexercised option will always consider fair value option. Yes, fair value option. Will always consider fair value option because you have created SBP reserve account with the fair value option. So if you reverse it, you need to use fair value option only. Got this point, Krishnamurti? Have you understood this question? Everyone respond. The last question. Last question is based on group share based plan. One question I have taken for that also. This question also till now not asked in exam but can be asked in MCQs or can be asked in what 4 marks question also. A parent company grant 30 shares to 100 employee, each of its subsidiary. A parent company grant 30 shares to 100 employee of subsidiary company S on the condition that employee remain employed by company S for 3 years. In this question you can see the employee is providing services to subsidiary company, but parent company has granted option to the employee of subsidiary company. So this is known as group share based plan. So in this case, expense will be recognized in the books of subsidiary company, correct? And SBP reserve, SBP liability will be recognized in the books of parent company. So they have granted the option. They have granted the option. Have you understood this point? Assume that outset at year end 1, year end 2, it is expected that all the employee will remain employed for all the 3 years. At the end of year 3, none of the employee has left, means all the employee has vested the option. The fair value of shares on grant date is 5 per share. Company has agreed to reimburse company P over the term of agreement for 75% of final expense. What they are saying, company S, because the company parent companies has granted option to the employee of subsidiary company. For that purpose, subsidiary company will compensate by payment to parent company to the extent of 75% of final expense. They will not compensate for 25%. They will not compensate for 25%. What would be the accounting treatment? Journal entry in the books of company. I said in the books of subsidiary company we recognize EB expense. So we'll say EB expense account debit. Correct. And whatever has been paid, we'll say to bank. And whatever has not been paid, assume this is a capital contribution from parent company. It will be capital contribution from parent company. So what is the total expense that you need to find out? So this is how many employee? 100 employee. What is the option? 30. What is the fair value of the option? Fair value option is 5 into, you will do 1 by 3. It is become 100 into 30 into 5 divided by 3. 5,000. 5,000 75% paid and 25% not paid. It will be what? Capital contribution of the company. Second year, third year also same journal entry will be done. Now, accounting treatment in the books of company B. So just try to understand. Will recognize SBP reserve to the extent of 25%. Correct? Sorry. We recognize a bank account will be to the extent of 75%. So bank account 75%. Correct? But to SBP reserve, this will be SBP reserve will be 5,000. SBP reserve will be 5,000. So whatever has not been received by the subsidiary company will be considered as an investment in subsidiary company. So for 25% we'll say it is an investment in subsidiary company. What journal entry? Investment in subsidiary company. Bank account debit to SBP reserve. Second year and third year also same journal entry, and then SBP reserve will be exercised, means then equity shares will be allotted at the end of third year during exercise period, if that information is also given. Have you understood this particular plan? This question is also important, can be asked in exam for 2 marks MCQs or 5 marks journal entry question. But this point, I think this also you have understood. You can see all the question whatever I am expecting have been done from my point of view, but I will also inform you some questions. There are some questions that you also practice. So I'm just identifying some more questions that you should practice by your own. Correct? I'm just giving you some question as practice. Chalega? I'm coming to my book. My job has been done. If you have any doubt, if you want me any question done, just ask me right now only. Okay? So I'm just giving you some questions for practice. My job done. I hope you have understood. Please, please, please just try to understand that right now your job is to practice as much as you can practice, provided other chapters need to be also done. Sir, in accounting of subsidiary company, why we are crediting equity? Just try to understand. Parent company, if they are showing investment in equity instrument, so if my it is investment, to other company it is capital contribution only. Now, just try to understand in this way. Just try to understand in this. Uh, you have provided me services. You have provided me services, but I am not supposed to pay anything. So it is just like capital contribution to me now. With today only I have said that if I am receiving some cash, yeah, I have received some goods, or if I have received some, oh, I have said this point in my regular class. Oh, just try to say. Suppose I received some cash from you, or I have received some goods from you, and I have received some services from you, and there is an obligation to pay. So this is liability. But if there is no obligation to pay, it is equity. Equity. So subsidiary company had received some services, some uh, some uh, that sorry, my mistake. Subsidiary company has received some services from employee. For that, only 75% need to pay to the parent company, because parent company has compensated that for the services to the employee of subsidiary company. So only 75% is paid. What is not paid, that become equity contribution. Understood? Correct? Correct? Yes, sir. There are some question I am just highlighting some question that also you do. But all the good question I have already done. Left. Is 17 you do? 17 you do, Byron. Question 17 as per my question bank. Also have been asked in exam, can be repeated. 17 this question देख लो कौन सा क्वेश्चन इन आरटीपी नवंबर 2018 एग्जाम में आया नवंबर 2019 में. Then this question 18 this cancellation वाला भी पढ़ा देता हूँ. Question 18 कमाओ. Anara Fertilizer Limited has issued 2000 share option to 10 of its director for an exercise price of rupees 100. Of rupees 100. Oh ho. The directors are required to stay with the company for next 3 years. This cancellation is also good question, can be asked in exam. Payable option estimated 130. Expected director to vest the option is 8. During the year 2, there was a crisis in the company and management decided to cancel that scheme immediately. It was estimated further as below that fair value option at the time of cancellation was 90. Market price of share, this is not relevant information. Don't require market price of share, we require fair value option. There was a compensation which was paid to directors, and since only 9 directors were currently in employment during the date of cancellation, the scheme has hence amount of rupees 95 per option has been given to each of the 9 directors. How the cancellation would be recorded? This is a question of cancellation. So sometime what happened, the option can be cancelled. Option can be cancelled, then what will be the accounting treatment for that? Let me explain what they have given the question. Suppose this was the grant date 50, 51, 52, 53. What is the total number of directors? 10 directors. What is the option given? Number of option given per director is 2000. 2000. Fair value of option on grant date. Fair value of option on grant date is 130. 130. Understood? And at year end one, they are expecting that 8 employee will vest the option. Vest the option. This is the estimated number of employee. This is suppose the date of cancellation. On the date of cancellation, there were 9 employee. There were 9 employee, and the fair value of option on the date of cancellation, it is given fair value of option on the date of cancellation. How much given? Given 90, 90, and the compensation paid is given 95 per employee. 95 per employee. This is the entire question given. Now, in this case, can you say first on year end one, you'll pass one journal entry. EB expense account debit to SBP reserve. This journal entry. Based on this information, so 8 employee into 2000 option into 130 into 1 by 3 you'll do. 8 into 2000 into 130 divided by 3. It is coming 6,93,333. 6,93,333. The first year journal entry you have understood? I think no doubt. First year you have understood? Hello. Now, on the date of cancellation, what Ind AS 102 says that the SBP plan has been cancelled. The plan has been cancelled. The plan has been cancelled. It does not mean that we are not supposed to compensate the employee. Can you see there will be some negotiation with employee? Means the cancellation can be with settlement or without settlement. Right now we don't know. But can you say now it will be settled in cash? Now it will be settled in cash. So what they want to say, even though it has been cancelled, but we are supposed to pay to the employee. Therefore, we should recognize all the remaining expense of this plan on this date only. Whatever expense has not been recognized, recognize that expense on the date of cancellation only. Means year 2, on the date of cancellation, will again pass one journal entry, EB expense, account debit to SBP reserve. And we recognize the remaining expense. Now there are how many employee? 9 employee into 2000 into 130. This becomes the total expense. 9 into 2000 into 130. Coming how much? It's coming 23 lakh 40,000. 23 lakh. Out of that, how much already recognized? 6,93,333 minus 6,93,333. So how much is left? 16,46,667. So this will be recognized as an expense on the date of cancellation only. So 16,46,600. 16,46,667. This point have you understood? Correct? Have you understood this point? Now what Ind AS 102 says that this is equity, but now the payment will be done in cash. So now it will be settled in cash. So it means SBP reserve will become now SBP liability. SBP reserve will become SBP liability. Correct now. So SBP liability should be measured at fair value of option on the date of cancellation. On the date of cancellation. So can you see it is as simple as buyback of equity? It is as simple as buyback of equity. Is for equity now you are paying cash. Means you are repurchasing the equity interest. So this will result in buyback of equity. Correct now. So what we'll do on the same date, we'll convert SBP reserve. What is the SBP reserve? That is 23,40,000, and it will become SBP liability. SBP liability based on the fair value of option on the date of cancellation. So it is 9 into 2000 into 90. 90 is the fair value of option on the date of cancellation. 9 into 2000 into what? 90. 9 into 2000 into 90. It is coming how much? 9 into 1000 into 90 is coming 16,20,000. So difference, whenever you buy back equity, the difference will remain in equity only, and therefore the difference of this account will be transferred to retained earning. So this will be transferred to retained earning, because I think if you have done financial instrument chapter, so for buyback equity the difference will always remain in equity. Correct now. So difference what? 23,40,000. It is coming 7,20,000, and this 7,20,000 will be transferred to retained earning. Correct. Then NSE will come on the date of settlement. However, in this question, date of cancellation and date of settlement is same. So on the date of settlement, liability will be paid based on the agreed settlement price, and that is 95 rupees. So now we'll do SBP liability account debit. It was 16 lakh 20,000, but now payment will be done based on negotiation. So negotiation has been done 9 into 2000 into what? 95. 9 into 2000 into 95. That is how much? 17 lakh 10,000. You only say if you are paying more for the liability, it will be transferred to PL or return earning. So this become loss. Loss will be transferred to PL. So this will be loss on settlement, that will be transferred to PL. How much loss on settlement? 16 lakh 20,000. The 90,000 will be transferred to PL. And the 90,000 will be transferred to PL. Understood? This will be loss on settlement. Don't say EB expense. This will be loss on settlement. Got this point? Correct. This is the entire journal entry. However, in the solution they have used some calculation based statement. Now you will understand this calculation based statement if you have understood the journal entry. So in exam you can do the calculation. The same question asked now, do calculation in this way. Just read this, you will be able to understand. Now one more point. Whenever there is a non-employee share-based payment, whenever there is a non-employee share-based payment, or you have understood that measurement date will be date when the control of that goods has been received. So what journal entry will do? Asset account debit to SBP reserve. Is whatever asset we have purchased to SBP reserve or SBP liability. Correct now. Now this journal entry will be done when you have received the control based on the fair value of goods and services received. So you need to measure this, and we need to measure the SBP reserve based on the fair value of goods and services received. If it cannot be measured reliably, then the second preference is the fair value of equity instrument issued. So first preference for the non-employee share-based payment is the fair value of goods and services received. If that is not measured reliably, then use the fair value of equity instrument issued. Correct now. That is one point that you read. This type of question have been asked in MCQs. Correct. Just checking some other questions are there or not. This 35, however, I think this was wrong question given in exam, but if you want to read this question by your own. Now this question might not be repeated, but do by your own. बस a question में drafting issue था, तो they have assumed two things and done that question. I think other question you can all do. I have taken all the question. No question has been left with share-based payment. I hope you have understood the entire chapter, and you have liked the classes also. You are liking my revision classes. Bole yes or no? Whether it is helpful or not, whether SBP chapter share-based payment has been completed from your point of view or not. We started at 3, means in 2 hours, within 2 hours we have completed. It is less than 2 hours. I have completed the entire revision. Entire revision means from exam point of view. Now no question is left. Is now I will say thoda sa read the content. Once read the content and the chapter is over from your point of view. These chapter completed today. Share-based payment chapter completed. Now balance time. If you want to do some other subject, do it, or revise some other chapter. Correct now. Got this point? One request has came for India's 21. Let me decide when I will take India's 21. Okay. With right now I am tired. I am totally tired. Right now though I can't take. So thank you very much. Everyone is saying thank you very much. I am also thank you to you all. But believe me, I am अभी feeling कैसा आ रहा है कि I am also writing exam. So I am also with you. इस मेरे को भी tension हो रहा है. You understood? I am also getting tension, but मजा आ रहा है. You are enjoying or not? India's 33. One request came for India's 33. Actually what happened कि I have no time. क्या करें? Because from 29 I am also taking revision video in Hindi also. Right now I have joined Unacademy. So Unacademy has requested me to take revision classes for Hindi also. तो conflict हो गया इसमें. करेक्ट ना. तो थोड़ा सा हिंदी वालों को पढ़ा देंगे हिंदी में. ओके बोलो, everyone is happy or not? I am planning for 2133. For the 2133, don't think much about that. Okay, but 33 is very easy. You can do it by your own. enjoying. So all the best for your next preparation. Continue your preparation. आई वॉन्ट एवरी वन टू स्कोर मोर देन 70+. 70+ लेके आना है. अभी जी जान लगा दो, अभी भी टाइम बाकी है. टुडे इज व्हाट 26, 27, 28, 29, 30, 31. 5 days आर लेफ्ट. जी जान लगा दो, 70+ आना है. यू कैन गेट 70+ इन एफ आना. बिलीव मी, ग्रुप 1 तो निकल जाता, ग्रुप 1 निकल जाता. 70+ मिनिमम टारगेट. ज्यादा लाओगे तो आपकी इच्छा. करेक्ट. माई टारगेट इज 70+. 70+ लेके आना है. अंडरस्टूड? Correct. And one more thing I am saying, that every day in the morning now, whenever you are starting your day, say that I am the best. Always say to yourself that I am the best. I am the best. I can do it. I am chartered accountant. Start your day by saying that only. I am the best. I am chartered accountant and I will do it. I will definitely do it. And so this keyword will give you a lot of energy. Lot of energy it will give. Abhi mere saath everyone write down. Everyone write down here only. In the chat box, write down, I am the best. I am chartered accountant. I will definitely do it. I will definitely do it. Likho, everyone likho. In the chat box, write down, I am the best. I am chartered accountant. Full likhna, chartered accountant, full chartered accountant. And I am definitely going to become CA. I am definitely going to become. These 3 words, 3 sentences, write down. Everyone write down. I want 3 sentences, all the 3 sentences. एक से नहीं चलेगा. I am the best. I am chartered accountant. I will definitely become CA. Very good. Aravindam, you have written exactly whatever I have said. CA, oh ho ho ho, oh ho ho ho. Balachandra, CA Balachandra. I am so happy. Is when I used to do CA, I have created one visiting card by writing CA Chiranjeev Jain. Actually, my legal name is Sachin Jain, so I have created with CA Sachin Jain. My legal name is Sachin Jain. Professionally, I am known as Chiranjeev Jain. Okay, chalega. But my signing name is Sachin Jain. So I have written CA Sachin Jain there. Visiting card बना लिया था CA बनने से पहले. Got it? Very good. Thank you very much. Okay. Very good. I'm happy. I'm happy. Believe me, this time you are going to become CA. You have written this now. You are going to become CA. Now every day you are starting. Write down a message in the chat box. These 3 sentences which will start. Don't say me good morning. Good morning is not required. This 3 is required. If these 3 sentences you are writing now, so I am the morning become good. The morning become happy. Morning become good. Understood? Very good. Excellent. Excellent. Good. Good. Very good. मजा आ गया. मजा आ गया. Nice, you have not written. You have written thank you, sir. I don't want thank you. I want these things. This all whatever others are writing. I am the best. I am the chartered accountant. I will definitely become CA. बोल दो. Very good. Excellent. चलो इजाजत दीजिए. Now just allow me to leave. Allow me to leave. Okay. Let's see. Today night I can come because my throat is paining actually. ना बोल दिया. My throat is paining because I need to take tomorrow also some class. So I need some rest that I can come back again because tomorrow is very important day for revision. I am taking consolidation and business combination. Okay sir. So tomorrow consolidation and business को 4 देना है. 4 देंगे उसको 4 देंगे. Correct? Got this? Okay. So allow me today. I am planning in the night 1 hour before. If I am coming with some revision, I'll just inform you 1 hour before. ठीक है ना? But at this point, you will be updated in Telegram group or you will get the notification in you. All the best. Bye bye. Love you all.